What does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons in all fairness. Don't you think?
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks.
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
To expose everything you won't admit. And action. This entire video is based on a true story. When I do like motivational speeches or even tell myself like love yourself and you should love yourself.
This is Lily Singh. But to fans all over the world, she's the YouTube star Superwoman.
What if everyone to girls, Superwoman? I know we can change the world for the better, one positive day at a time.
My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room. They had no idea.
Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone.
Until someone called them, like a family member from another part of Canada was like, Canada, is your daughter making videos? And the mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're going to go to school and then graduate and then get married and then get a job and have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
It was 2010, and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms, and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad, and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe. And my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oi, Lily, where the rest of your skirt, huh? I teach you like this, to walk around like this, showing everything to everyone?
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And were pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man. But then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What if everyone it's a girl, Superwoman?
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about, like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name.
Maybe there should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She starred in a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up!
But after surpassing those goals, success has new meaning.
I've really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views, the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope. And so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice.
Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime, you know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did, and should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, I mean, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it was like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company. And that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW.
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! It's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag #GiveDivas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves ahead.
Okay, I'm placing an order to sell short at 118.48.49. Order placed to sell short euro. Sorry, I didn't point out that it will be euro against dollar. The price 118.49.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now, so we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing a new management team, et cetera. There's a lot that we've gotten done. but this is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world, and I just want to get back to doing business.
It's quite interesting. You said true believers.
Yeah.
Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, etc. That is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well, profits,
peanuts by the standards of
profits would help. So at some point, we absolutely have to become profitable, and that's part of the plan.
Do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things spar against each other?
I don't think that profitability and culture are their issue. It's the company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues, that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes because working with governments, regulators, et cetera, sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got a sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose, out of these different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire, and I think as a company we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
But some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that when these are conversations that a number of regulators and cities have wanted to have with us for many years, and I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth. And listen, any innovator, to some extent, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far.
Short position open for euro at 118.49. I open short position for 118.49. Okay.
For regulators, and then continuing to take risks and continuing to do daring things, and I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are three keys to transport and where the industry is going: autonomous, electric, and shared. And I think all three are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months. Not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering in means
to a layman like me?
Crashing. Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, there's an autonomous car, yes or no? And we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
And will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
So within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also,
I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
That's quite interesting, because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars, I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars, you have to deal with existing roads, existing everything. Flying cars, essentially, you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back somewhat reluctantly back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week, he said that Uber should focus on repairing its market share in the US and on key European markets rather than going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is
you
a brand.
Had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for everyone.
You want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people. That's
telling me.
Just not interesting. I do think seriously though that the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard, but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point, we are leaning forward. In 2018, for us, is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question, do you think that you have solved that part of the culture? But secondly, do you think that this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement at the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue, perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers. The tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous because they have followership within the company because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership, so it is incredibly important for the top performers to actually be held to account more radically than anyone else because they're the ones who have followership at the company, and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values, and one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms because to me, it's not just these values that you put on the wall and kind of people stare at and it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company, and he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company. And to some extent with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in this space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
Well, welcome to a very special Tuesday edition of Bloomberg Business Week. I'm Jason Kelly. You're going to hear from my partner, Carol Masser, in just a few minutes because we've got a heck of a show. So many CEOs, some co-founders of their companies as well, top voices in their field. They're worried about just about everything from a vaccine to food to beer. Man, we've got it all for you. But let's figure out first what's going on in the markets. For that, we turn to Charlie Pellet. Hey, Charlie.
Hi, thank you very much. Happy Tuesday. Indeed, lots going on today. Let me begin with a quote on Apple because they're rolling out new products today. A lot of people following that. Apple shares up now by 1.3%. The Dow, the S&P, NASDAQ all pushing higher. Off session highs, but third day of gains on the S&P. Up 26 right now. That's an advance of 0.8%. NASDAQ up 164 points, up 1.5%. The Dow pushing higher by 85 points, up now by 0.3%. Technology shares leading equities higher in the wake of this week's deals activity. Also, data suggesting the global economic recovery is gaining traction. Right now, we have got the 10-year yield 0.67%, down 2/30 seconds. Gold lower a little change, down about 0.1% at $19.54 the ounce. But a significant mood in crude oil today. West Texas Intermediate up 3.1% right now, $38.40 a barrel. Recapping, equities higher. S&P up 26, up by 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. So much coming up on the show. As I mentioned, food, beer, we got it all. We're going to hear from the CEO of Whole Foods. Very excited about that and much more. But let's set the Business Week agenda if we can. Dave Wilson with me, stocks editor for Bloomberg, author of the chart and the stock of the day. Talk to me about this trade, Dave. What are you saying?
Well, I mean, there is a familiar element to it and a not so familiar element. Now, the familiar part is when you look at the 11 main industry groups in the S&P 500 and you see who's leading. I mean, it's those industries with ties to the big tech companies.
Yeah.
We're talking about technology, communication services, which is Facebook and Google's owner Alphabet. Also, that consumer discretionary category that includes retailing and therefore includes Amazon. So you're talking about three of the best performers among those main S&P 500 groups today. The exception, and that's where things kind of deviate from what we've seen over time, is real estate. You're also seeing utility stocks higher, and the one group that's down is financial companies, which tells you it's all about interest rates staying down. That's a plus for the real estate companies because, their dividends look more attractive. Their borrowing costs aren't so extreme. Similar story for utilities. And as far as the financials go, all you have to do is consider that J.P. Morgan Chase came out at an investment conference and followed the lead of their peers by bringing down their forecast for net interest income this year. So, which tells you that, the issue with low rates is an issue not just for J.P. Morgan. It's, really across the board. And we're seeing that, in the group, the way it's performing today. And let's face it, financial stocks have been a laggard for some time. It's just you're getting, in a sense, more of the same with that interest rate theme really being front and center.
Well, it's interesting, too. I mean, the banks are obviously wrestling with a lot these days because the other headlines around J.P. Morgan, Dave, were about Jamie Dimon, the CEO, of course, well-known, saying, yeah, we're going to get some people back to work. We need to get people back to work. It's damaging for them not to be in the office and with each other. And so a lot of things going on for these big banks, to say the least.
Oh, absolutely. And, you can argue what's really behind, that decision because, other banks are taking a different approach. We've got a commentary out today from Emily Oster, who's a professor of economics at Brown University, basically talking about, companies perhaps looking at what's going on with the virus and saying, it's going to be hanging around for a while. We have to get back to something more normal in terms of work. And that may well be J.P. Morgan's motivation in that regard. So, put it all together. And it's clear that the virus is still, out there as an issue that companies are having to grapple with. And they may have to grapple with it for some time.
Absolutely. Everybody grappling with a lot. Dave Wilson, thank you so much. We'll check in with you later on in the show for your chart and stock of the day. It is the Bloomberg Green Festival this week, and what a lineup we have. My partner, she has been seconded to be a part of all of that. She's got a big interview coming up with the CEO of Inga. I'm going to toss it over to Carol Masser right now.
And I want to welcome everyone who is joining us virtually for the Bloomberg Green Festival. And I also do want to welcome our Bloomberg Business Week listeners on Bloomberg Radio joining us at this time. We're going to talk about the business for climate action, and we're going to make the case for that. We've got a company and a leader who has done just that. And I'm delighted to introduce Jesper Broden. He's the president and CEO of Inga Group. They are home to three businesses, of course, all of those IKEA stores that are around the world. We're also talking about their shopping centers and then their investments arm. So a lot to talk about. And as I said, they are operating globally. Jesper, so nice to have you here with us. I got to ask you, first of all, you said as we were getting ready to set up that before we get into what you guys have done in terms of sustainability at the store and the DNA that is the sustainability really within your company culture, you said to us this is the first time you've traveled in 6 months, that you've left Sweden and you're in the Netherlands. Just talk to us about how that feels. Talk to us about the last 6 months. You guys operate globally. The virus has just impacted us also. So just tell us kind of how things are going.
Well, this year for us, like for everybody on this planet, we have been through a very special journey this year. And I must admit, as I shared with you, to be traveling again, I felt a bit like the old movie Castaway when coming back to the office, seeing people and enjoying that also, I must say. At the same time, obviously, we, just like everybody else, have figured out new ways of leading. We have figured out that we didn't have a map for this situation, but we had a very strong compass, I think, with the way we like to lead and our values that helped us actually, I think, take many good decisions. But it's been a ride.
It's been a ride, no doubt about it. It's interesting that you say that, and we're going to get into kind of your sustainability strategy. That is so much the IKEA and corporate culture here. But I do wonder, having so many of those measures in place, are there any specific anecdotes that you can tell us that helped you guys get through this crisis because of those green initiatives, those sustainable initiatives?
Well, you can say, I think it's all intertangled, right? People, planet, and business. And you can't take out any of these from the equation. So what happened, obviously, to us was that we had periods of dramatic closures in our stores. And we had to find ways to both protect ourselves, our people, our customers. And then, on the other hand, we had to make sure that we could save the jobs for the future. And what actually happened in the end of the day was that we were speeding up everything around multi-channel and online. And we went from a good year to a record loss forecast to actually coming back on half of our estimated profit in the end of the day. And that was thanks to, I think, the entrepreneurship of getting things right quickly.
Do you think we're through it? Are you guys getting ready for another wave?
Well, I think at a certain moment we were quite early on forecasting different scenarios, and the period that we have just entered we called the new normal. And I think it's a bit of a deceptive term in a way, because the way we see it is that for at least a year to come we need to be very agile, very prepared for outbreaks. I think the term second wave could be misunderstood, so we like to plan more for outbreaks and how to deal with that in the best possible way, both for jobs, for business, and for everything we do in society and contribute to. And obviously, it's clear for all of us that, 1 year later again, it's still going to be learnings. There will be things that we will be, doing differently, and there will be a lot of, I think, amazing things that we carry with us from this period as well, hopefully including the way we realize the importance of investment in sustainability and the opportunity of doing that right.
Well, let's get to that, because despite this being a crazy year, a tumultuous year, you guys are on track. And forgive me, I'm going to read from my notes because I want to get it right. You're on track to achieve and exceed a goal to produce as much energy from renewable sources as you consume by 2020. You have made massive investments, about €2.5 billion in wind and solar power. You've set a 2030 goal to be climate positive, meaning you're going to reduce more gas emissions than you emit. You are when it comes to electric, 100% electric, 100% of the time, ahead of targets when it comes to deliveries in Shanghai by EVs. You're doing that in Amsterdam, LA, New York, Paris. And here's a goal for everyone who's listening. By 2030, you guys have set your ambition is to inspire and enable 1 billion people to live a better everyday life within the limits of the planet. It's really heady stuff, and it's impactful stuff. How tough has this been to do, and what has been the business case for climate change for you all?
Well, I think if you look at IKEA's history, you can say we started out with a founder that was a very thrifty person, very smart around resources, and I think that's part of our story. So part of this, that sustainability and being smart about people and planet is part of our legacy. My own story started back in '95 with the company when I joined in Asia Pacific at a time when we invested in I think what is still today an amazing code of conduct when it comes to production. Those days we had some discussions about, can we afford it? Will it drive costs to do the right thing with working hours, salaries, etc.? And in the end of the day, it turned out to be brilliant for business. We have the most efficient partners, happy co-workers along, etc. So I think we already then we saw some myths that we needed to bust. And the same goes for the climate goals that we have committed to, where we do not have all the answers yet. So we still have some gaps to be filled the coming years. But we are convinced that this is good business for 3 reasons, or you can say for 2 reasons. One is that our co-workers and our customers expect us to take the lead. So it would be, I would say, dangerous to not take that lead from from your revenue side. But secondly, the business model we are building is the new low cost. So sustainability shows in case by case to be the way we will provide low price furniture in the future.
You say, you know what, a couple things. You said it was brilliant for the company. So I'm wondering if you can put some numbers on that in terms of the business case for doing all of this. But I also wonder, you said myths to bust, because I can only imagine some of the internal, discussions, Jesper, that you folks had that said, no, we can't do that. I know it's good for the environment, but, it's going to cost too much, or we can't recreate our supply chain. So give me a little bit of that feel.
No, but absolutely. I think the best number I can give you is that last year we're very happy and proud that we were able to grow with some 6% plus, which is a good, a decent IKEA year. And at the same time, we reduced our absolute carbon footprint across the whole scope 1, 2, and 3 with more than 4%. So it was possible to show healthy growth and at the same time decarbonize, if you like. Obviously, we are very humble and respectful to the future to continue that journey, which is the plan. But that was, I think, the first year of proof for us. But then you can say to the myths, I think there are 3 myths that I see over and over again. One is that purpose and profit don't go hand in hand, which I think and we think is the opposite. There is a very strong myth that sustainability should come at a premium, which I think is very dangerous, because then this is a mass movement that needs to involve everybody on this planet. So therefore, it should be rather seen as the new low cost. And finally, there are a lot of myths around that consumption is all bad. And there is bad consumption, but there is also sustainable consumption. So these are the type of topics that sometimes lie in the way for taking the right type of action.
Well, and I do wonder, too, if things like supply chains, maybe when you guys set out, in the beginning days of the company, or even 5 years ago, 10 years ago, maybe there weren't as many suppliers or many folks that you could reach out to. But what I'm hearing today is a lot of them are out there already, so that if you want to have a greener business, a more sustainable business, you can find that in your supply chain. You just have to make those choices. Is that true? Is that fair?
I would say so. It comes down to, I think, from if you look at any type of industry, I think the entry ticket to anybody, and especially I would say companies of size, that holds a responsibility. So I think you need to start by committing, and there is a bit of a leap of faith in that commitment to Paris. You need to commit to ESG reporting and transparency as well. So I think these are the entry tickets for anyone. But then it all comes down to what is your category plan that you need to put in place. I saw, as an introduction here, I saw Ben at Shell in one of the most important industries, I think, to be part of the transformation, the fossil fuel industry, which we are all part of and have been. We belong to the consumption industry, home furnishing. So we have some different criteria maybe of things that we need to address. But the important thing is, as much as it can be inspiring to do the symbolic changes, we need to address where it really impacts. And thereby, we need to be able to also measure our activities against CO2 footprint and see that it really makes sense in the totality. And there are a lot of people, I think, who are still looking for the way how to do that. But there are many plans around, and I think IKEA's plan, which we are happy to share with the world, is just one of many good examples on how to do it.
Government has to have a bigger role in this. I mean, what's so interesting is that in order to get all this done, right, at a time when we're pushing back against globalization, when we're pushing back against cooperation, we've never needed it, more than ever before, whether it's on the health pandemic or whether it's on, the climate impact. And yet, what's holding that up? Or where have you seen progress? What's holding it up in your view?
Yeah, I think now I must admit, because I belong to the optimists of the world, so maybe I'm wrong, but I believe we are at a tipping point right now, and you can sense it. There is, of course, people who struggle with admitting the issues, and I do believe that we and most of us should spend less time on that. We need to look into the people who are ready to take a leap here and contribute to the movement, because it's also, the clock is ticking. And we probably have entered what is the most important decade in the history of humankind. So we need to get moving with actions. And thereby, it's not so much about discussing the problem that is needed. It's about discussing the actions that needs to be taken to mitigate the situation.
You know what's interesting? And if people are, I feel like, if you're not necessarily someone who, buys into or believes that we're having climate change, you guys get into the science and what the impact will be in your sustainability report. You talk about, if we see, 4-degree Celsius increase in terms of the heating of Earth, you write in this report, our ability to mitigate the risk is very limited and the costs for the business are far higher and more damaging. I mean, we're talking about the bigger impact we have on our environment, your access to resources, the cost of resources, the impact of flooding or fires, like all of this starts to add up, right, on the cost of doing business. And also, it's not as healthy an environment for people to live in, to work within.
Well, you can say that to your point. We have since many years passed the point where a climate threat is a theory. It's in our P&Ls already, and thereby I think it gives us more motivation. You can say on the challenging side of this, from a human perspective, is of course if we do everything right from now on, we still will have to pay for the debt that we have the last say 100 years or so. So we are in a hurry to turn the trend, obviously, and we will need to brace ourselves a little bit for the issues that we have ahead of us in spite of that. But I think it's a time for the world to come together, and it's time for leadership. And I actually do see that. If I compare 6 months, 12 months, 24 months back, there is a different story right now, industry after industry. And I think in particular in the corporate circles, there is industry leaders in every category stepping forward. I have the pleasure to be part of the World Economic Forum's Climate Alliance. And that's a group of very important companies in different categories that have moved from agreeing on the issue to actually committing and taking actions. So we see this in area after area. And I think to your point also, of course, this is a collaboration where we need to be very close to the political leaders of the world, because it's an important collaboration where I think politicians can help to incentivize and actually catalyze change much faster if we work together. So it is an opportunity, in particular now after COVID, as a lot of wise people have mentioned, to build back better. So that's what we need to do.
Well, talk to me about geography. I'm sure that there are parts of the world where it's tougher for you guys where you operate to kind of make the business case for climate action. There's also parts of the world that maybe don't embrace, some of what's in your DNA, your corporate DNA, whether it's China on one hand or Russia, So what do you do? What's your thoughts about operating there, even if you don't agree with all of their initiatives? Maybe they're not as sustainable as a company or a country, excuse me.
Yeah. No, I think to start with, I think the business idea and the vision of IKEA is to be where the many people are, to serve people within wallets with great home furnishing. And thereby, you can say we are slow and long-term in a way. So we don't enter a market and step out overnight, but we progress with investments, with our physical investments, with our digital investments. And our long-term goal is obviously to try to be where there are people. So therefore, we happen to be in Russia, in China, in US, in India. We have just recently started as well. Right. Then, obviously, political change tends to come with a shorter cycle sometimes. And there, we have little opportunity to do others than to adapt to realities. We have had decades of open trade, and now we have had recently a period where this has been more difficult. And with all the respect for the situation in the world, I think so far in our way of viewing it, collaboration over borders tend to both be good long-term for both jobs and for consumers. So sometimes this can be a struggle. But at the same time, I think we are at a place where we try to reach out and try to see how we can influence in a positive way in the society where we act.
I do wonder, too, if you think it's easier for you guys to be sustainable because it's a foundation that owns the company, right? And it's a different it's not a corporate structure, a publicly held company where every quarterly or every half year you guys are reporting your financials. Does that give you a leg up in doing all of this?
I think so, to be honest. I think some of my fellow colleague CEOs who are on the stock market, for example, working with quarterly targets, have a different situation that maybe that we have, and I have, being long-term foundational based, and also a foundation that works with, in the end of the day, charity for people and planet. So I think definitely so. And at the same time, we can still serve as an example, because the investments we make are not about charity. They are fundamental transformations into a better business. So in a way, I think it's okay that we can serve as an example for that. And then I think it takes a lot of courage today to be a leader, because at the end of the day, you have stakeholder capitalism to care for. But at the end of the day, I think you need to also face your own family, your friends, yourself. And at this time, there is an opportunity for each one of us to do what we believe is right. And in some cases, that can be easier said than done. But if we are a critical mass of companies that move in this direction, we will basically reshift the competitive landscape. And that's what actually is happening as we speak, including how consumers respond to brands.
Well, that's, I think, a really significant part of it. You know, I think about my co-host on our radio show, Bloomberg Business Week. We both have kids, you know, and kids who are turning around looking about, you know, what are the ingredients in something, or looking at where a company manufactures, what's the climate, you know, how much water is wasted in manufacturing. How significant is that in terms of, again, supporting the business case for being sustainable, for being green in what you do? I mean, we talk about it so much, Jesper, and I know it's important to me, but I do wonder, is that becoming much more significant? Do you guys talk about it in like a boardroom? Are boards having these discussions because they understand it's important?
I think so. To be honest, a few years ago, I think it was more difficult to bring in those personal views, but also the many parts of the equation here. Again, back to the myth that profit and purpose were two different worlds. And I think we belong to the lucky ones in that case. We have very good discussions, and we are challenged by our board to do a better job when it comes to sustainability, including communicating it. But again, I think we are at the tipping point where this is becoming the new reality. And you know how it works. When you create the momentum, suddenly it becomes very lonely on the other side. And from a customer perspective, what we see is dramatic. And there is no difference in the world if we go from market to market. If you go from China to US to Sweden, the concerns are up in the 80s, 90s of all the people we interview. And we interview a lot of people on this topic. They are concerned, typically, and they also typically struggle with understanding how they can impact. And of course, consumers can impact to start with by choosing what brands to buy from. And this is getting more and more clear. And in particular, I think when you go down to the younger generations of consumers, they are more picky, they are better in researching, and they are very demanding. So I think, in a way, the consumer trends are helping us to take some decisions.
Hey, one thing I want to ask you, because we just got about 5 minutes left. In addition to being climate positive by 2030, you are committed to being circular by then as well, which is fascinating to me. It's changing waste into resources across your operations, enable people at home to do so as well. This is basically how you get rid of waste. It's massive. How do you do that?
Well, it's like many things in sustainability. There is not like one silver bullet, so to say. So I think every company needs to look at their footprint, also in materials, so to say. But then again, when you start to pick them in the right order, you find a lot of opportunities. So in our case, to recycle paper and recycle plastic, for example, is a business benefit. It's not a problem. And then you can go all the way to some of the material equations that we have not yet found a good solution for. So it's like case by case, you work away. But if you look at it, latest investments we did in Netherlands for a model that is being scaled out to more markets is how do you bring back mattresses, and how do you actually make new mattresses of the same. It's not only a good business case, it's a good investment. And down the line, there will be taxes and malus systems put on the wrong way of doing this. So in a way here, I think, again, governments and companies are and should more go hand in hand in how to stimulate it. Circularity is not it's not the end goal. It's one way to achieve sustainability, and it's a very attractive one of most of them.
You know, kind of in line with this, we have an audience member asking about product durability and life cycle, the trade-off between affordability and durability. What are your thoughts on that?
Yeah, I think it's a very good question, because also I would say it's a bit in the landscape of myths, but a few years ago we took a big address within the company to actually review everything in quality, and everything that wasn't durable we challenged and moved our targets on. So I think it's one of the steps to achieve sustainability is obviously to make sure that you have longevity on everything you do. And then you can say one of the dangerous myths there is also that you have to pay for quality, or that you have to pay for sustainability. That's not the way we see it. We think by scaling things, we can build in quality and sustainability into our industries. And there's an abundance of amazing examples on how that works. So I think also there you can say mass production is actually a friend of sustainability, because that's how you scale change.
If you had one piece of advice to, I think, our audience here and for leaders that they could take that would significantly impact their company and make them more sustainable, what would it be?
I think what has helped us was to fundamentally agree on what the reason to why this is important. Secondly, I think there needs to be some sort of leap of faith and commitment, meaning that giving yourself maybe, hopefully not to 2040 and 50, but to 2030, you should also, I think, have some confidence that some of the answers lie by exploring the journey ahead of us. And then I think the third would be to study some of the leaders, study some of the plans that exist, because I think there's a lot of things that we can replicate in different industries. And by working together, I think we can move this agenda faster. And we will.
If we don't,
we will make it happen. We have to make it happen, and we will, I'm sure.
Well, that's what I was going to say. I mean, if we don't get this right, what's your fear?
No, if we don't get this right, we will get it right, because the consequences will be tremendous for us. So I think we tend to spend less time, again, on doubting the change and less about the fear. We had much more of that a few years ago. But right now, we're busy in the actions. We're working in scope 1, 2, 3. We're addressing some low-hanging fruits and some very difficult challenges. So I think it's just to get busy. That is how to do it.
Well, Jesper Brodin, as I read through all that you guys are doing, you really are the poster child and really have the playbook in terms of how to be a sustainable company in so many different methods. So I suggest everybody really check out your website, because you really are doing it in so many different areas. Jesper, thank you so much. Really appreciate it. I think next time we do this on a sailboat. You're a sailor, I'm a sailor, so I think we should be doing it this way.
That sounds good. Thank you so much.
I wish you well. Thank you so much. Of course, that's Jesper Brodin, President and CEO of Inca Group, joining us here for the Bloomberg Live Bloomberg Green Festival. And we appreciate you guys watching. Stick around. We've got another interesting segment coming up, and certainly more segments throughout the week. This is Bloomberg. Thanks, Jesper.
All right, and that is, of course, my partner, Carol Masser, finishing up her conversation with the Inga Group President and CEO, Jesper Brodin, a wide-ranging conversation. This is a company, of course, the parent of IKEA, that really is in the midst of some huge moves for itself and really for the world as we tackle this massive climate issue. Much more ahead from the Green Festival, including a little bit from Bill Gates. Yep, heard of him. First, let's get back to Charlie Pellet. Hey, Charlie.
Well, hello there, Jason Kelly. That was a fascinating conversation. We do have stocks pushing higher right now. We're off our session highs, 90 minutes to go ahead of the closing bell on this Tuesday. Will we see another close, another move higher for the S&P? Got to stick around. Stay with Bloomberg Business Week. Here's where we stand right now. We've got the S&P up 23 points. That is a gain of about 0.7%. The S&P now at 3406. The Dow pushing higher again, off session highs, but up 76. A gain there of 0.3%. 1%. NASDAQ is up 138 points now, higher by 1.3%. 10 years down 2/32 with a yield of 0.67%. Gold down $2.18 the ounce at $19.54, a drop there of 0.1%. And West Texas Intermediate crude oil up now by 2.7%, $38.28 for a barrel of WTI. China's economic recovery from COVID-19 accelerated, spurred by a rebound in consumption as virus restrictions eased and larger than expected gains in industrial output. Andrew Murtha is Vice Dean of International Research Cooperation at Johns Hopkins University and the China Studies Program Director, and we asked him if he sees the economic trend in China continuing.
It seems to be somewhat stable, and it's going to likely continue kind of modestly, not kind of dramatic recovery that maybe some would like. But it really is, I think, dependent on whether or not we do see a resurgence of the virus.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. An important note, if you are planning travel to either California or Ohio, New York has now removed both California, Ohio, and other states from its travel advisory. After the bell, a couple of closely watched earnings reports. We'll be hearing from Adobe and FedEx. Shares of both companies are higher. Adobe up 2.3%, FedEx up by 1%. We'll be all over those numbers as they break. Recapping, S&P up 20, a gain there of 0.6%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much, and welcoming back into the fold. I had a very easy half hour. You did a great interview, Carol Masser. Fascinating guy. I mean,
He's
I have to say,
cool guy.
I did not know all of those things about IKEA. Like, everything they're doing it's pretty remarkable.
It is pretty remarkable, and it's really been in their DNA from the get-go. Their founder, in terms of what they wanted to do, and I think they've been refining it as you go. But it's pretty remarkable that they've set out these initiatives in terms of being, not impacting the climate, and also then about even being better, thinking about waste, thinking about their supply chain. It's pretty remarkable what they're doing, and it's not easy. And as he said to us, Jesper Brodin, he said, listen, it's easier being not a public company, and I do think it's tougher when you are a public company. But nonetheless, there's a business case for doing it.
Well, exactly. That's exactly what I was going to say, is that I think his skepticism about the idea of profit and purpose not going hand in hand it was a really interesting thing. All right, so you can catch that entire interview at Bloomberg.com. Also on Bloomberg.com, let's hear a piece of another big interview from the Green Festival. It's with Microsoft founder and billionaire philanthropist Bill Gates. He chatted with our own Eric Schatzker, Bloomberg's editor-at-large. Part of this festival, in this excerpt, Gates talks about politicizing COVID-19 treatments and vaccines. Check it out.
President Trump has made no secret of his desire to see a COVID-19 vaccine soon, ideally before the November election. How worried are you, Bill, that the approval process is being hijacked by politics?
Well, that would be a tragedy. And any suggestion that, a politician, helped create the vaccine or it's faster because of a politician is a very dangerous thing. We saw with the completely bungled plasma statements that, when you start pressuring people to say optimistic things, they go completely off the rails. And so the FDA lost a lot of credibility there. Thank goodness the companies are saying that the FDA's open-mindedness to be asked for an emergency use license before there's efficacy data. They're not going to seek that shortcut.
Do you still trust the FDA?
I think in the FDA, there's a lot of professionals. Historically, just like the CDC was viewed as the best in the world, the FDA had that same reputation as a top-notch regulator. But, there's been some cracks with some of the things they've said at the commissioner level. Hopefully the staff isn't pulled in that direction.
So it sounds to me like you're harboring perhaps some reservations. What about the CDC? You made reference to the reputational damage that's been done to the CDC. Can you take what the CDC says to the bank any longer?
Well, the CDC is largely being written out of the picture because you have people at the White House who aren't epidemiologists, saying what a great job they've done, and so it's no longer a set of experts. The CDC actually did make some mistakes, the way they thought about testing, the way they hadn't figured out to bring the commercial providers in. There's a number of countries like South Korea who got that testing going very well. And we're very clear that if the result takes more than 24 hours, you don't reimburse for that. It's got to be a timely result.
One of the big risks in politicization is public confidence. Polls show 1/3 of Americans will refuse to get vaccinated, and a majority of Americans believe a vaccine is being rushed. Has the damage already been done?
I hope not. These companies are very professional, and the benefits of the vaccine here are very dramatic. After all, not just on the health front, but the economic front, the education front, we need to bring this pandemic to a close. And thank goodness that we have this private sector expertise that we want to shape into a global public good that gets to everybody on the planet. I think some people won't be in the first wave to take the vaccine. They may take a wait and see attitude, but I do think over time we will be able to get to the majority of the population to get to a level where the transmission slows down very dramatically.
Americans, and for that matter, Bill, citizens of the world, have been put in this awkward position where they may find themselves more trusting of what they hear from the private sector, from the companies developing these vaccines, as opposed to what they hear from this government or perhaps other governments. Given the accelerated timeline on which these vaccines are being developed, how confident are you that they'll be not just effective, but safe as well?
Well, these vaccines are going through this phase 3 trial where you look at the efficacy and you look at all the medical records to see if there's any adverse events. The companies have their reputations. Many of these companies are doing this on a not-for-profit basis, so there's not some big profit upside to many of the companies involved, including the ones that will have the most scalable, low-cost vaccines, which is 4 of the leading 6 companies here. So, vaccines are complex. There's often rare side effects, even for the vaccines that have dramatic net benefit. We're all going to be looking at the data, but a safe vaccine, I think, is very likely to come out of this R&D work.
All right, that, of course, is Bill Gates with our Eric Schatzker, Bloomberg News editor-at-large, at the Bloomberg Green Festival. It was a wide-ranging interview, but as you can see, certainly getting into the vaccine right there. We're going to hear more from Eric when he sits down with Ray Dalio in just a moment. In the meantime, let's get to world and national news headlines. For that, let's turn things over to Nancy Lyons. Hi, Nance.
Hey, Carol. President Trump is hailing the agreement signed today at the White House by Israel and 2 Gulf Arab nations, the United Arab Emirates and Bahrain.
After decades of division and conflict, we mark the dawn of a new Middle East.
The bilateral agreements do not, however, address the Israeli-Palestinian conflict. Well, a landmark agreement has also been reached with the family of Breonna Taylor. Not only will the family receive $12 million for her death at the hands of police, but the agreement includes reforms to the Louisville, Kentucky Police Department. Taylor, a young black woman, was killed by white police officers in a botched raid last March. Her mother alleged the police used flawed information when they obtained a no-knock warrant to enter the 26-year-old woman's apartment. The policing changes would require more oversight by top commanders and adherence to safeguards. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Thanks, Nancy. And let's move it right over to Eric Schatzker with Ray Dalio.
From me on the subject, you want to hear from our next guest. His name is Ray Dalio. He is the founder, chairman, and co-chief investment officer of Bridgewater Associates. Ray, I know you'll be delighted to hear that sitting in rapt attention isn't just the Bloomberg television audience, but the whole world of Bloomberg radio listeners as well. It's great to have you.
It's always good to speak with you, Eric.
Ray, you've developed a framework. You're a systematic thinker. You've developed a framework for understanding the current situation in the economy and financial markets, a situation you have said the world last confronted in the lead up to World War II. And I want you to tell me if I've got these three key components correct. One, big deficits, big fiscal deficits and money printing. Two, inequality and internal conflict, and with it uncertainty, of course, and the potential for political disorder. And three, a rising power, in this case, China, challenging the established world order. Have I got that right?
Yeah, you have that exactly right. That framing will represent where we are for the next number of years. And then we had the virus, but that's a minute by minute type of issue. So as we are sitting here today and we're doing the exercise of thinking, will Washington come through with a package? And then how will they finance that package? That's a big issue. And then when we deal with what will the new tax bills coming from the presidential candidates be, tax and spending, that'll be a big issue for the markets. And then when we're dealing with China's emergence and the conflicts that we're having in terms of trade, technology, geopolitics, and so on, those things, month by month, week by week, will be important for the markets.
So let's explore the implications of all three. And let's start with fiscal deficits and money printing. We've already seen some of the impact, at least some of the impact in financial markets, of all the massive fiscal spending and all the massive monetary stimulus, stock prices at record levels, negative real yields on treasuries, negative nominal yields on sovereign debt around the world. Where does it go from here, Ray?
Well, first, I want to convey the mechanics of that. When there's more, you run a larger deficit, and there's printing and buying of financial assets, it drives down real yields, and as a result of this, it drives money into alternative assets. There's a supply-demand problem for bonds, but when the central banks at the end of the day print, in much the same as Roosevelt did in March of 1933, that causes financial asset prices to rise and supports the economy, but diminishes the value of debt, the real value of debt. So that's the dynamic. Where we can expect it to go from here is always that way in a greater degree. So we know that if a big bill is passed, or if next year we have a larger deficit, we know that the Federal Reserve will be faced with the choice of either allowing interest rates to rise or buying that and monetizing that debt. And that diminishes the value of those bonds because it's just supply demand. When you have that debt, you have to sell it. And when we look at who are the buyers of that debt and how much do they have of it, we're dealing with a situation like in the 30s that could be threatening even to the reserve currency status. In any way, it diminishes the value of that which is being produced. That means money and credit, and it drives money into those other assets. So it's that kind of market action.
Is there a real threat right now to the U.S. dollar's status as the world's reserve currency?
Yes, there is a threat. It's an evolutionary type of process. There's not yet a good alternative in the form of a currency per se, but people are not investors, big, large institutional investors, don't run out necessarily to alternative currency because the three major reserve currencies all have the same basic problem. That's why they move into a new storehold of wealth. And you see that the storehold of wealth, like in 1933 reaction, is equities, is gold, is other asset classes that go up. So when you buy a company and you have low returns on your bonds and so on, That is that kind of movement, but the same is true for gold and other asset classes. If that gets too far, and it's standing the risk of, it's very dangerous. It looks like a currency defense. In other words, if those who are holding bonds, which are a lot, choose to sell the bonds because they're not providing a good return, and they're not, and because there's so much debt production and debt monetization, that puts the Federal Reserve or other central banks in the very difficult position of operating like a currency defense. Mechanistically, as money leaves that debt, that means either interest rates would rise, which would be terrible for the economy and markets, or they're forced to buy more and more. And that is how a spiral could occur.
Ray, how do you expect inequality and internal conflict to play out in the November election?
I don't have an edge on knowing who will be elected and whatever. I think in either case, you're going to have very large deficits coming forward. There's an ideological difference. And when I look at the conflicts, I studied over the last 500 years these cycles, because the same thing, I started in the 30s and I went back before that. But if you look at that particular pattern, there is a risk of conflict that can be bad. The worst case scenario could be a situation in which we don't have a clear winner of the elections, and we don't have a clear process for getting at the winner of that election. If there's not an agreed upon process, and that there's a lot of conflict about how do you resolve that type of thing, you could start to see bad things happen. If that was a situation where there's power politics and, does one state, do they use the National Guard and all of these things? How do you resolve those distances? That would be an extreme risk. It exists as a possibility. I'm not saying what the probability is, but it's a major thing.
How does an investor prepare for that, Ray?
Well, I think we have to realize we're in a period of great risk. And the most important thing is to know how to diversify well, to diversify by asset class to achieve balance, to diversify by country, and to diversify by currency. Diversification well is the most important thing to achieve that balance.
So if I'm understanding you correctly, if an investor were to have the plurality of his or her assets in the United States, U.S. domiciled assets, U.S. dollar denominated assets, now sounds like a good time to think about diversifying into other currencies and other domiciles?
That's right. And also, for example, does gold is it part of your portfolio? Are inflation index bonds part of your portfolio? You know how to balance those asset classes. I think there's a bias that's a dangerous bias. And that bias is that the recent past that we've experienced is representative of the future. And if you go through history, when you have some of these conflicts, you might have a different result. And diversification doesn't cost you anything, because when your asset classes are going to, if you balance them right, have approximately equal expected risk-adjusted returns. So you can balance them because they all compete with each other. So not one is necessarily clearly better. So diversification is a wonderful, mechanical, good way to reduce risk without reducing expected return.
About the continuing breakdown in U.S.-China relations.
I'm very worried about it. I studied this over, as I say, last 500 years. If you're interested, I've written these things up on LinkedIn, so you can see them on LinkedIn. So the patterns. There are 5 kinds of wars, and we're in 4 of those wars, and we could be in a 5th. So there's a trade war, there's a technology war, there's a geopolitical war, there is a beginning of a capital war, And then there's the question always of a military war. And having watched these things over a period of time and having close contact with the situation, we don't internationally have a rule-based system so that there is a testing of each other's powers, which is done in public. And when leaders watch one leader win and another leader back off on that brinksmanship testing, that's a high-stakes, dangerous game.
No question.
So it's a big issue, and it will be a big issue for the rest of our lives. And Graham Allison wrote a wonderful book, The Thucydides Trap, and
we've talked about it before. Ray, before we run out of time, I would be remiss not to ask you about your firm, Bridgewater. No secret to many people, it's had a challenging, difficult year. Are you confident, Ray, that the firm can put all of this stuff past it, whether it's external or internal, and perhaps most importantly to your clients, improve returns in your flagship fund?
Yeah, I don't have a problem with my clients because we have something like $140 billion of clients who have faith in us. Otherwise, they wouldn't have us the money. We were the largest hedge fund for a particular reason. There are a lot of people who are not knowledgeable about that. We had a bad year so far. Our all-weather portfolio is up a couple of percent, but our Pure Alpha lead fund is down about 15%. We, over the last 20 years, we've never had any significant downturn, nothing, all positive years. But we knew that there will come a day. We missed the pandemic and going down, and that's the reality. I want to say that there's a problem sometimes in the media. We've had a particular problem, particularly with one correspondent with the Wall Street Journal, Rob Copeland. And if you look at the particulars on the case that we went to in terms of misrepresenting what the situation is, that's an issue. That happens. We don't settle. We fight. We're transparent. These things come about. I'm not worried about any of that. We're just operating in the same way that we've always operated. And yeah, that's right. We had so far a bad year.
Ray, I appreciate your candor. I hope you understand this is not exactly the kind of forum where I want to get into a debate over who was right and who was wrong, and I understand that you're concerned, and I'm sure you'll take it up. But most importantly, I want to thank you for taking this time to talk to us. To the Bloomberg television viewers and radio listeners, that was Ray Dalio, Chairman and co-CIO of Bridgewater. Stay with us. This is Bloomberg.
All right. Thank you, Eric Schatzker. A great interview and really getting into the meat of it there at the end. That's one of the most read stories on the Bloomberg, by the way, today, is a long story by our own Kathy Burton about Ray Dalio and Bridgewater's performance, Carolyn.
Yeah, and listen, we've seen it. It's been a tough time for some, legendary money and investment managers over the last, I want to say 5 years, that was year after year after year after doing well, and then all of a sudden that wasn't the case. We've seen it with Bill Gross. We've seen it with others. And sometimes it's the environment. Sometimes it's a strategy that just doesn't work anymore. So,
meanwhile, market's up.
Meanwhile,
for all of that.
Yeah, bouncing around a little bit. We're off our highs and lows of this session, but you're right. Another day where we're looking at, tech once again fueling market momentum. And Jason, we're up about 1.5% on the NASDAQ, up 159 points, just a hair on the Dow.
Yeah.
And the S&P is up about 0.7%. So.
And what's funny is, when you sort of try and synthesize all this together, it's interesting to see the market reaction, hear about Bridgewater's performance, and also hear from Ray Dalio that, we may be going into a fifth type of war. We're already in 4. This is his view of the world, and he shares that view with a lot of people that it is not pretty out there in many ways, and it is a world of disruption and a world of volatility, which is not to say you can't make money, but it does defy a lot of what you might see if you were just looking at the major stock indices here.
Well, and the world is changing, and the way we do things is changing, and we see it in terms of market dominance. And so, if there was ever any guesses about who are the big big companies that continue to fuel momentum, certainly in the marketplace and maybe even in the economy, whether it's Amazon and others. You know, these are companies that are impacting our world in a big way.
And Apple, we're going to hear all about what they had to announce today. Fancy new watch coming out, new iPads. Mark Gurman's going to be along. We're going to have the CEO of Whole Foods and co-founder with us. We're going to talk about beer. So lots more to come. It's not just all markets and, you know, saving the earth.
No, although I got to say that's really important, folks, because if there's no earth, there's none of anything.
There's no beer.
There's no beer. Oh, my God. This is Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Tuesday, September 15th. The Dow, the S&P, NASDAQ holding on to gains. Technology shares leading equities higher following this week's deals activity, along with data suggesting the global economic recovery is gaining traction. The dollar fluctuating, crude oil pushing higher. Let's begin with West Texas Intermediate crude up 3.1%, higher by $1.18 a barrel at $38.43. Brent crude up 2.6% at $40.66. Gold lower, little change, down 56 cents the ounce at $19.56. The 10-year down 1/32 with a yield now of 0.67%. Your equity standings: S&P up 23, a gain of 0.7%. NASDAQ up 152, up 1.4%. The Dow's up 70 points for the Dow Jones Industrial Average. That is a gain right now of 0.3%. So the S&P up for a third day. Tesla, Apple, and Nvidia pushing NASDAQ high. higher after the index's worst week since March. Tesla shares surging 10%. Apple introducing new products today, down now by 0.2%. Nvidia shares they're higher by just about 0.8%. Well, a Bloomberg exclusive. You heard it moments ago right here on Bloomberg Business Week. We sat down with Ray Dalio, the head of hedge fund Bridgewater Associates. He has run up hefty losses this year, even as rivals have minted money in topsy-turvy markets. And in our conversation, he talked about a number of topics, including the importance of diversification.
Well, I think we have to realize we're in a period of great risk, and the most important thing is to know how to diversify well, to diversify by asset class to achieve balance, to diversify by country, and to diversify by currency.
After the bell, we will be getting earnings from Adobe and FedEx. Adobe is up by 2.6%. FedEx shares pushing higher now by just about 1%. Recapping, S&P up 22, up 0.7%. The Dow up 65, up 0.2. NASDAQ up by 1.3%. I'm Charlie Pellet, and that's a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
All right, let's do a little Bloomberg Business Week economics now. We have covered a lot of ground in the first hour.
I know.
So let's dig into the economy if we can, Carol, because it is hard to get your arms around. We've been talking about this, sort of all these cross currents in many ways, be it a climate crisis, be it a broader economic crisis. We turn to Adam Ozimek. He is chief economist for Upwork. He joins us on the phone from lovely Lancaster, PA. So amid all of this, Adam, the workforce has continued to change pretty radically. Even going into the pandemic, we saw a gig economy that was still a little bit uncertain and uneven and exacerbating some issues out there. You guys have done a recent study about the independent workforce. Talk to us about what you found.
Sure. So, talking about what's going on in the gig economy is often, difficult because it's such a huge amount of variety. So when we talk about what was happening before the pandemic, there really is, a huge range of activities that count as freelancing. This ranges from selling things online to, working in the transportation industry and short-term gig-oriented stuff. But it also includes really skilled work. There's a lot of programmers and writers and marketers, working full-time professional skilled jobs here. So it's really important to understand that context before we dig in that, freelancing is extremely varied, and it's not just short-term, low-skilled gigs.
I know. I was a freelance reporter on air at a major network, and I was freelance for a couple of years. Like, it's just amazing, like what falls into the freelance category, Adam.
Yeah, no, it's everywhere. I mean, freelancing is across age groups, and it's across skill levels. And, what we really found this year is that the flexibility of freelancing and the value that provides has really been on display. I mean, the pandemic has been incredibly challenging, both to businesses and to individuals, obviously. And there's been a real serious need for quick adaptation. And we see that in our report. So what we found is that a lot of people have actually started freelancing this year for the first time. So 12% of the workforce started freelancing after COVID. And at the same time, we've had a large percent of the workforce who was freelancing, and they've paused. So you have a lot of people who have started and a lot of people have paused, and it really just shows the flexibility and that, there are parts of the economy that, are really put on hold during the pandemic, and that's where the pause freelancers come in. And then there are parts of the economy that really face fast business adaptation challenges, and companies needed to respond quickly to the, needing to adapt to the pandemic, needing to go remote very quickly, things like spinning up e-commerce operations and logistical challenges and changing marketing plans. And freelancers have been a really important part of that for those companies.
And so one of the questions we ask in the midst of this pandemic, especially Adam, and I wonder if you were able to get to this in your work, is sort of the what sticks and what's temporary as we sort of get to whatever this next normal is going to be, because a lot of the things you're describing, have been underway. The pandemic has been, in many cases, an accelerant. So what does this look like as people return to the office, as the economy starts to right itself? Is this something that continues? Does the move toward freelance accelerate? What happens in your estimation?
It's a really fascinating question, because when we do this survey, like if you would have asked me last year, what I would have told you is that there's always a lot of freelancing, and it's not necessarily a growing or shrinking part of the economy. It's just something that has always been with us. And sort of this idea, there's this idea out there that, everyone's going to be a freelancer. And I don't really agree with that. I think that freelancing is extremely valuable to the people who work that way, and it's extremely valuable to the businesses who hire that way. But it's sort of always been with us. This year, I actually do think there is good reason to think that we're going to see some, permanent increase in the freelancing share of the workforce going forward. That's because a lot of the new freelancers who are doing it for the first time, they say they want to continue doing it. And a lot of the freelancers who have paused, they say they want to do it in the future too. And so on the sort of labor supply side, I think that makes for a good case that there are going to be lots of skilled people who want to keep working like this. They enjoy the flexibility. They enjoy the lifestyle, and a lot of them need it. Freelancers are disproportionately both caregivers, and they live in households with a disabled person or are disabled themselves. So I think because they value that flexibility, that's going to make people want to freelance a little bit more than they used to in the past.
But does it make it a more, the vulnerable part of our population? Does that help make it increase? Because I sometimes think so many freelancers don't have many of the benefits that we all, in full-time great jobs, like those of us where I work at Bloomberg, you've got great health care, great programs. Does that create, making a larger part of our population more vulnerable?
Well, there's a couple ways to look at that. So one thing is that obviously lack of health insurance is a problem for a significant share of this country, and that's true for a lot of workers both in and out of freelancing. So that's not necessarily a freelancing specific thing, and that's a policy issue that we need to do something for everybody, is to make healthcare more affordable. The other thing is that a lot of freelancers, this is not just the way they prefer to work, but the way that they have to work. So in past surveys, we've asked about people who are either for reasons of disability or because they're caretakers, whether they could take a traditional job. And what we find is that a lot of freelancers couldn't do a traditional job. So if you, went to the people who hire freelancers and said, no, you absolutely must hire only, 9-to-5 traditional employment, we think that a lot of these people, they wouldn't be able to do those jobs. They need the flexibility. They value the flexibility. And that's, from the freelancer side. Obviously, from the employer side, there's a lot of benefits too. So I really think that it's important that we don't view these jobs as just taking the place of traditional employment, but truly being additive to the economy. This is work that would not otherwise have been done.
All right, we're going to leave it on that note. Hey, Adam, good to check in with you. Adam Ozimek, he's a chief economist at the online talent recruitment website Upwork, joining us on the phone from Lancaster, Pennsylvania. Let's turn things over to Nancy Lyons for a check on world and national news headlines. Hi, Nance.
Hey, Carol. A historic signing ceremony at the White House today. Israel, the United Arab Emirates, and Bahrain are agreeing to normalize relations. It was a deal brokered by the United States. President Trump calls it the dawn of a new Middle East.
Today, the world sees that they're choosing cooperation over conflict, friendship over enmity, prosperity over poverty, and hope over despair. They are choosing a future in which Arabs and Israelis, Muslims, Jews, and Christians can live together, pray together, and dream together.
Trump says he expects more agreements to follow. A landmark settlement has been reached in the civil case involving the death of Breonna Taylor at the hands of Louisville, Kentucky police officers. It involves a payment of $12 million, a record payout by the city in a police misconduct case. But a family attorney, Lenita Baker, says the deal also involves a commitment to change the system.
It's important to know here that a financial settlement was non-negotiable without significant police reform. And that's what we were able to do today.
Taylor was killed by officers back in March during a no-knock raid. Democratic presidential nominee Joe Biden is in Florida, hoping to pick up Latino support in the battleground state. He began his trip with a Veterans Roundtable in Tampa, where he slammed his opponent for calling dead soldiers suckers and losers.
Donald Trump doesn't seem to be able to conceive the idea of selfless service or being part of a cause that's bigger than yourself.
Tonight, Biden will hold a Hispanic Heritage Month event in Kissimmee, Florida. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thanks so much. You are listening to Bloomberg Business Week. Getting back to the office, Carol, it's complicated. Even if you have a lot of enthusiasm about it, even if you're Jamie Dimon and you have some big, almost existential concerns about your workforce, you want to get them back to the office, but it ain't easy these days.
No, unless you're Citigroup and you're just resuming job cuts, and then you don't really have to come back to your office.
And then they don't have to come back.
We'll get to that in just a moment. This story by our Michelle Davis, JP Morgan. Yeah, Jamie Dimon saying, okay, folks, it's time to get back to the office. We've been talking about this, though, and really highlighting some of the initiatives of what JP Morgan is up to. The CEO has been going into the bank's offices since June. He says he sees economic and social damage from a longer stretch of working from home, pointing out the government should be focused on cautiously reopening cities, learning from earlier mistakes made in hasty attempts, he said. So, yesterday we talked about less productivity at JP Morgan, especially among some of those younger employees, but he is worrying that a lot more damage could be had by people staying at home in broader society.
Yet they have had some people come back. JP Morgan has, and just a few hours after he made those comments, here comes Michelle Davis, as you mentioned, and Kathy Burton. She's got another big story on the Bloomberg today about Ray Dalio. With the scoop, JP Morgan sending some traders home after a worker contracts COVID-19. So down at their 383 Madison Avenue, that's the old Bear Stearns building, there was an outbreak. They had to send some folks home. So it's complicated, and as they point out, shows the challenges banks face as they try to bring more staff back to the office.
And I think as people open up, we're going to see a rise in cases, and I think that's going to raise the level of discomfort among workers. I mean, it's just tricky. It's just a hard situation. And I know everybody would like to be back at work and getting everything up and running, but it's tricky. It's really tricky.
Yeah. I think you have a lot of bosses who want to get people back to work, and then some workers are like, well, let's hold on. But, I got schools to take care of. I got health to take care of. Let's go slow. So we'll see where it ends up.
I'm just uncomfortable. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 43 minutes to go ahead of the closing bell. Those gains are fading. However, the Dow, the S&P, NASDAQ still advancing. But let's head right over to the first word breaking news desk for today's after call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks with a late-day fade. The Dow is currently up 20 points, was up 237. S&Ps are up 16. NASDAQ still up by 1%. The U.S. 10 yield at 0.68%. Gold is little change. Transports gain 126 points. And WTI crude futures are up 3%. Among the main 11 S&P sectors, telecom, real estate, and consumer discretionary led. Only energy, staples, and financials fell. Leaders to the upside in the Dow, Dow Inc., Home Depot, and Salesforce, while Caterpillar and J.P. Morgan led to the downside. In deal news, there is a CFIUS meeting on the TikTok Oracle plan that started at 3 o'clock. And in other news, Apple turned negative during their product event. Wrapping things up, FedEx and Adobe both report after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, I thank you very much, Bill. We'll be all over FedEx and Adobe as they break to hear live breaking news over your Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Listening to Bloomberg Business Week. Well, yeah, it's about that time. It's 3:15 in the afternoon. Let's talk about some beer. Let's do it. We talked about saving the planet. We talked about the state of the markets. We talked about the gig economy. And I think we all need a drink. Gavin Hattersley is the CEO of Molson Coors Beverage Company. He joins us on the phone from Pennsylvania. They've been doing some deals and doing a deal with something you really only find on the East Coast, talking about Yuengling. Gavin, really nice to have you with us. Tell us what's going on in the world of beer.
Well, thanks for having us. Yes, today we announced a joint venture with the Yuengling family to expand the great Yuengling beers across to 25 new states where Yuengling is not available. And Yuengling is a very, very popular brand out on the East Coast, and they get tens of millions of consumers asking to bring it to states that they're not in. So this is a joint venture to do exactly that.
And forgive us, we do want to also introduce Wendy Yuengling. She's Chief Administrative Officer of DG Yuengling and Sons, sixth generation member of the Yuengling family, and she's there with Gavin as we speak. So, Wendy, talk to us about why this partnership and what you hope to get out of it.
Hi, good afternoon. Thank you for having me. We're very excited. We're partnering with world-class brewers and operators. It's going to give us the opportunity to expand further west with our brands. And interestingly, it brings together three iconic brewing families. So we are a 191-year-old company in our fifth and sixth generation, and we're very excited to be partnering with both the Molson and the Coors families in this new venture to open up markets out west.
And let me ask the two of you, I mean, what are the challenges out there when you look at the consumer marketplace? I mean, shoppers, consumers, beer lovers, they have a lot of options. And I just wonder, what is it that made you think, okay, we've got to do this now? How do we set ourselves apart? Gavin, why don't you take it?
Okay, thanks. Look, I mean, we've been talking for several years now as we built a relationship and built chemistry between us, and so we've now reached a point where we have a deal to form the joint venture. And our experience watching the Yuengling brand from the outside is that when it goes to a new market, there's no shortage of demand. And we'll spend the next 12 months or so getting ready for the joint venture, deciding which brewery to brew it at and where to go. And I have no doubt that once we decide and we take the Yuengling brands to that new market, that it's going to do very well from day one.
So Wendy, talk to us. Go ahead, Wendy.
I was just going to say, we found over our 191-year history that Yuengling fans are unbelievably loyal. So we're currently sold in 22 states. So in the rest of the markets where you can't get Yuengling, our fans are unbelievably loyal to our brands and asking for us to ship out to those states. So we feel like this is an incredible opportunity for both Molson and Coors and Yuengling to be able to meet that demand finally.
And so, Wendy, just staying with you for a second, what made this particular partnership the right one? Because, there are a few other global brewers out there. Not that many at this point because there has been a lot of consolidation. But talk to us about establishing that chemistry that Gavin alluded to.
Yeah, that was really important to us. We're a family company. We're family owned and operated. You know, we're so fortunate to be in our 6th generation. And so the family component of this was very attractive to us, to be able to partner with other legacy brewing families like Coors and Molson. And we just feel like our cultures are very similar. There's a shared commitment to quality and tradition amongst the two breweries. So we just feel like it's a natural fit for Yuengling.
And so, Wendy, just one more question for you. You've mentioned several times the family aspect to it. I'm sort of fascinated because we don't talk to, candidly, a lot of family businesses, and certainly not a lot of family businesses that have been around for almost a couple centuries. What is it about this business that is so conducive, the beer business, to being a family business?
Yeah, we're very lucky. So my great-great-great-grandfather started the business back in 1829. And it's gone from generation to generation, passing from father to son. And, you know, my sisters and I are very fortunate. There's 4 girls that are part of the 6th generation, and it'll be the first time the business is transferring from father to daughters rather than father to son. And I don't know, there's something about the beer business. It definitely brings strong family ties, and we're so happy to be a part of it.
Well, and I do think about, you know, I know in the press release, it's, you know, 3 storied brewing families, and they're, you know, collective 18 generations, you know, of families that, you know, have been brewing beer. You know, Gavin, what is it about that background that maybe, you know, differentiate yourself from some of the other folks that are out there on the market?
Well, it's really 3 businesses that have still got families involved with them. So, you know, you've got, as Wendy said, the Yuengling side, and then you've got the Coors family and the Molson family are still involved in our business. And, you know, such a commitment to quality and great people that I think, as I said, I think the chemistry just worked really well between us, and I'm really excited about it.
All right. Stick around, guys. We're going to come back.
Trends in the marketplace, right?
Yeah.
And the virus impact.
Yeah, exactly, and sort of the types of beer that people are drinking these days, and beer versus cocktails. Listen, this is a sweet spot, as they say.
People drinking a lot of everything right now.
Exactly. Exactly.
So
we're going to continue our conversation with Gavin Hattersley, the CEO of Molson Coors, and Wendy Yuengling, the Chief Administrative Officer, part of the family, running DG Yuengling and Son, the 6th generation, as she pointed out, of the Yuengling family. It's so cool.
And I love that, you know, father passing it off to their daughters, you know, or his daughters. I really think that's pretty cool. All right, you're listening to Bloomberg Business Week on this, what day is it?
Tuesday.
It's Tuesday.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Coming up, we're going to keep talking about beer. We're going to understand what people are drinking and what this pandemic may have done to that market, because we feel like people are drinking more, but also it's not as easy to shop these days. So how is that all coming together? We've got two people we can ask about that.
Yeah, exactly. We're going to get back to our conversation with Gavin Hattersley and Wendy Yingling. We'll get to that in just a moment. Back to your top business stories, another check on the trading day. Here is Charlie Pellet.
Hi, thank you very much. We'll be listening for that conversation about beer coming up right here. We've got 28 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ, they are now trading mixed. Moments ago, we had the Dow turning negative, lower now by 27 points, have been higher for most of the day. Late session fade, the Dow now down by 0.1%. The S&P is up 11. That's a gain of 0.4%. But look at NASDAQ holding on to a 1% gain today, up now by 108 points. Tesla among the tech standouts, up another 7.5%. NVIDIA shares, they're up now by just about 0.3%. 10-year yield, 0.67%. Gold down 0.2%, 19.58 the ounce. Big move for crude today, up 2.9%, 38.33 for a barrel of West Texas Intermediate crude. Sources say a national security panel reviewing Oracle's bid for TikTok is meeting this afternoon to decide whether to recommend the president approve or reject the deal. Oracle shares are moving higher on the news. Oracle up now by 2.7%. China's economic recovery from COVID-19 accelerated, spurred by a rebound in consumption as virus restrictions eased and larger than expected gains in industrial output. Andrew Murtha is Vice Dean for International Research Cooperation at Johns Hopkins University and China Studies Program Director. And this morning on Bloomberg Television, he was asked about the mindset of the Chinese consumer.
They have a kind of a greater degree of concern over the health issues, so that, you know, we see the rise of automobile manufacturing, for example, and exports and construction, but at the same time we see a drop in cinema box office revenue. And so those things point to the Chinese consumers kind of trying to play it safe when it comes to their health.
Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. After the bell, we'll be hearing from Adobe and FedEx. Right now, shares of both companies are trading higher. Adobe's up 1.9%, FedEx up by 0.5%. Recapping, the Dow now slumping 45, down 0.2%. S&P up 8 points, up 0.3. NASDAQ up by 0.8. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get back to our conversation right now. We're talking with Gavin Hattersley, President and CEO of Molson Coors Beverage Company, on the phone in Pennsylvania, along with Wendy Yingling, Chief Administration Officer at DG Yingling and Son, and as her name belies, the sixth generation of the Yingling family. And they announced a joint venture today to expand the geographic footprint of Yingling beers. Let me put it out to both of you, and Wendy, maybe you take it first. I am curious, the impact of the virus. We've been talking with so many CEOs and leaders about the last 6 months, what it's meant for their teams, what it's meant for their business. Give me your thoughts on how that has been and kind of where we are right now, especially when you look at the marketplace and the outlook.
Yeah, we've definitely seen an impact on where people are buying and consuming their beer. Our on-premise has been hit hard, and it's been tough with all the bars and restaurants shutting down, but you'll see more people shopping in the off-premise and stocking up and pantry loading. And as a result of it, we've seen staple brands, tried and true companies like Yingling, really resurge during this, and we've seen tremendous improvement in some of our peripheral brands like Light Lager and Black and Tan. So we've fared pretty well in all this. It's been tough on everybody across all industries. Primarily for us, it's the on-premise bar business.
Right. Gavin, I would imagine similar for you, but from a brand perspective, have you seen anything surprising or different in terms of what's been more or less popular than you might have anticipated?
Yes, we've experienced the same thing as Wendy just referred to as well. We saw initial strong pantry loading in March. It was there was a 4th of July weekend back in March, and we've actually experienced 3 or 4 4th of July weekend load-ins over summer. So we've seen strong demand. We've also seen consumers go back to tried and trusted brands, and in our case, those would be Miller Lite and Coors Light and Blue Moon. So we've seen a similar struggle in the on-premise, but it's shown up in the off-premise for us in those 3 brands. I guess what surprised me a little bit is we haven't seen a trade down. You know, in recessions past, we've seen a trade down to cheaper beers, and we haven't seen that actually. In fact, somewhat to the contrary, we've seen a trade up into above premium products.
What do you think that is?
Well, I think the stimulus package certainly helped. It certainly put more money into folks' pockets. I also think that, you know, your dollar goes a little further in the off-premise than perhaps in the on-premise. So it's probably a combination of those 2 factors.
Mm. And Wendy, any supply chain issues that you've run into owing to the pandemic in terms of either workers not being able to work or supplies not getting to where they need to get to?
No, we haven't had any issues, fortunately. We're very lucky. Our workforce is very loyal and committed. We've been able to keep our breweries running. We haven't had any issues with getting materials in. We have definitely seen a spike in our can production over bottles, but fortunately we have a good relationship with our vendors, and we've been able to keep our products in supply and keep our distributors stocked and our retailers' shelves stocked.
So when you guys look at the outlook, we've just got about a minute left, and if I can just give you guys about 30, 40 seconds each. Wendy, what does it look like 2021? Do you have any visibility?
Yeah, we're really excited about next year, not only with this joint venture with Molson Coors, but, you know, right when this pandemic hit, we were in the midst of launching our new upscale light brand. So we were just starting to launch a new brand called Flight by Yuengling. And despite the interruptions, we've been very impressed with how it's performing. We've seen a lot of trial and repeat purchases. And importantly for us, it's bringing new consumers into the Yuengling brand family. So as we look to 2021, we're very optimistic about that brand and about this partnership with Molson Coors to be able to expand further west.
And Gavin, just about 30 seconds for you about visibility and outlook for 2021.
Sure. Look, besides being very excited about this joint venture with the Yuengling family, we launched 3 new products this year, Vizzy and Coors Seltzer in the seltzer space, and Blue Moon Light Sky as an extension of the Blue Moon brand. And all 3 of them have started off really, really well. We've increased capacity, and I think we're going to really make news and get substantial growth out of those 3 brands next year. So I'm particularly excited about that.
All right. Well, thank you both, and thanks for making some time on this busy day. A big deal, for sure. Gavin Hattersley, CEO of Molson Coors Beverage Company, and Wendy Yuengling, Chief Administrative Officer of DG Yuengling & Sons, both joining us on the phone from Pottsville, Pennsylvania. Pick up some Yuengling. Love Yuengling.
I love
it's great.
It's great.
Our cousin Chris Kane, he lives down in Clark Summit, Pennsylvania. We go to his house, back porch, a couple Yuenglings. Awesome.
It all comes together. All right, let's get back to World and National News headlines. For that, it's over to Nancy Lyons in D.C. Hi, Nancy.
Hey, Carol. Attorneys for Breonna Taylor's family are praising the $12 million settlement reached today with the city of Louisville, Kentucky. Lanita Baker says it also includes a promise to reform the police department.
This is unheard of in one of these cases where you get a financial settlement and police reform. But again, it was important to us, to Breonna's family, to the lawyers involved, and it was important for us to give that back to the community, which has been fighting so hard to save Breonna Taylor's name.
Louisville officers killed Taylor while executing a no-knock search warrant at her apartment. No illegal substances were ever found. The settlement requires commanders to approve all search warrant applications and for officers to conduct risk assessments before applying for a warrant. President Trump presided over a signing ceremony today in which the Prime Minister of Israel and the foreign ministers of the United Arab Emirates and the Kingdom of Bahrain all signed an agreement normalizing relations between the countries.
Thanks to the great courage of the leaders of these 3 countries, we take a major stride toward a future in which people of all faiths and backgrounds live together in peace and prosperity.
The president and his allies have touted the agreements as evidence of Trump's deal-making credentials. The magazine Scientific American is endorsing a presidential candidate for the first time in its 175-year history, saying Joe Biden is the pick. The magazine says Biden is prepared with plans to control COVID-19, unlike Trump, who it says has done a poor job handling the pandemic. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Nancy, thanks so much. You are listening to Bloomberg Business Week. Well, maybe not surprisingly, given the makeup of our audience on the Bloomberg terminal and elsewhere. Carol Masser, one of the most read stories, Harvard and Yale facing a broad attack on race-conscious admissions. The world of higher education is getting more and more complicated. This is a little bit of a different front in terms of understanding who gets in and why and how at a time when big existential questions loom about college.
We've talked about this a lot at home. And what basically they're facing is challenges accusing them of legal challenges, accusing them of unfairly weighing the admissions process against Asian American and white applicants. And, I think we're all watching this very, very closely. I think schools, administrations, colleges, universities have worked very hard to create diversity among their student pool. And it'll be interesting to see what comes out of this.
Well, it may go to the Supreme Court, and that is one of the reasons why you have Patty Hurtado, one of our legal eagles, chasing this down. Just reminding folks, the Supreme Court ruled more than 4 decades ago that race can be considered as one factor among many in creating a diverse class. But that was a different court, and the Trump administration and the Justice Department, the current Justice Department, is essentially raising this as a big issue, and it could end up in the top court in the land. It is, by all accounts, a more conservative court at this point, and this play is being made by some conservative elements, again, including the current administration. So could really change the way that
dramatically
colleges make admissions, that's for sure.
Right, and the Justice Department, as you said, threatening to sue Yale unless it agrees to stop considering race. This would dramatically change how they look at applicant pools at their universities. So it's a must-read. Check it out at Bloomberg.com. You're listening to Bloomberg Business Week right here on Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. The Dow lower, S&P, NASDAQ both higher. Equities have paired gains as financial shares decline. The dollar fluctuated. Crude oil's pushing higher. S&P 500 index traded near session lows after J.P. Morgan Chase slumped. J.P. Morgan Chase shares, they are trading lower now. JPM is down by about 2.9%. The Dow's down 24 points, lower by 0.1%. S&P is up 11, a gain of 0.4%. NASDAQ up 97, higher by 0.9%. 10-year yield 0.67%. Gold down 0.2%, 19.52 the ounce. West Texas Intermediate crude up 2.7%, 38.26 a barrel. After the bell, it's Adobe, higher by 2.1% right now, also reporting. FedEx up by 0.3%. Recapping, equities mixed ahead of the close. S&P up 11, a gain of 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, it is time for the drive to the close. Jeff Crumpelman is with us. He's Chief Investment Strategist, Head of Equities at Mariner Wealth Advisors. Jeff joining us once again on the phone from Cincinnati, which is where they are based. Hey, Jeff, it's so nice to have you here with us. How are you?
Doing great. Yeah, so the summer's coming to an end, start going into the favorite part of the season, maybe not for the market.
Wow.
But, otherwise, so we're doing good here in Cincinnati.
Well, what are you anticipating for the market when you say that? I know seasonally, September, October, we all get a little hinky, and maybe this year is kind of even more interesting because it's coming right ahead of the elections. But how do you see it playing out?
Well, I think you hit the operative word there. Seasonally, it does tend to be a period where things stall and then it picks back up at the end of the year or going through the first part of the new year. And the election certainly makes it even that much more wiggy, if you will. And I think the wall of worry items that are out there are, number one, the market has gone so hard, so fast, the fastest recovery off a 30% decline that we've seen. And normal profit taking would, not be unusual. And then the angst of an election where you get major change in control, perhaps a sweep. And I think that you see COVID, while it is thankfully finally declining, still 35,000 or so new cases a day, well down from a couple weeks ago, but still out there, increasing in Europe. We don't have a vaccine yet. I think that there's enough in the psychological wall of worry camp to keep us cautious near term, but I've got to tell you that we remain positive on the next 12 months and do think that, we're up from here and we've got a target of 3,500 that we're biased to want to increase if we can push through some of these short-term issues, which I would anticipate, but we're still kind of hold your ground right now with our allocation, not increasing exposure to equity, maintaining the healthy exposure that we have.
And so, Jeff, talk to us about some of the names you like in this era and in this period. One that I believe we've talked to you about before that we love talking about on this show is Lululemon. We saw some results from them. And what do you make of sort of where they sit? They've made some acquisitions or a big acquisition when it comes to Mirror. Where do they fit into your portfolio now?
Yeah, I don't think the thesis has changed there at all. And as the stock has sold off a little bit on the quarter, I thought the quarter was actually very good. They beat. The guidance was a little bit soft, but you've got, main category in women's pants and continuing to, capture the men. I think I told you that I spent something like $700 on Lululemon not too long ago going into COVID, and I've loved every minute of wearing what I can wear as we work from our homes. It's just a wonderful product. So I think that you continue to have square footage growth, penetration internationally, categories in athleisure that are growing very handsomely, and they are just a wonderful product and very close to the consumer. The Mirror acquisition, I think, is interesting, and there is some synergy with, brand development with athleisure associated with it. But, that I didn't think that was a knock your socks off kind of transaction or transformational transaction in any sense. I just think they are executing. It's an execution story, and I would, on pullback, be very happy at adding to positions we've had. We've owned it. We entered into the stock originally somewhere around 190, so we've got very nice gains in it in relatively short order. And it's those types of COVID-oriented stocks, to answer your original kind of question, that we've been focusing on. We've upgraded. It's not like we've just sat still. We've upgraded into stocks that we think are beneficiaries of, or those that can be stable through COVID.
Including like a Starbucks?
Well, Starbucks would be an example. We divided the universe kind of into those that would take advantage of it, those that could manage through it, and spit in the wind stocks that you're just saying they are so cheap that they've been overly punished. And we have not come into those. Those would be the airlines, the cruise lines, hotels and gaming and those kinds of. We moved away from those.
Yeah.
Those are more spit in the wind in nature. Starbucks, I would kind of put in, they can manage through it very well, and they are at a good point in the curve. We've not owned that one. Lulu, we've owned for a while. Starbucks is more recent purchase. And we did that because of China recovery. China's 2 months ahead of us. And that's a big story over there. So we think that that's a cyclical recovery, a secular growth stocks with some cyclical improvement now that we're pushing through COVID a little further in the curve, certainly internationally.
We're going to hear from FedEx after the close, Jeff. How do you sort of see them? Where do they fit into this larger thesis?
Well, that is one that we've owned a little bit longer, and I think the thesis is simply e-commerce.
Yeah.
And you've actually seen transports that are non-consumer airlines oriented do quite well. So we own Knight Swift, a trucking company. As you go to online, you got to ship this stuff. And FedEx is right there. They spent oodles of money on upgrading their fleet, becoming more efficient. They made a very troubled acquisition in Europe that they're finally kind of working through. And we see them as uber cheap and just a beneficiary now going forward of some of the hard work they did early on. And they'll benefit from e-commerce. And certainly over the last couple quarters, that's what you've seen with the stock finally, after just getting thrashed. We're back up over 200, and it's still down from, the peak. So I think that this is a time to own it.
All right, we're going to leave it on that note. Jeff Krumpelman, thank you so much. Good to hear your voice. Chief Investment Strategist, Head of Equities at Mariner Wealth Advisors, on the phone from Cincinnati, and talking some names like Starbucks, Lulu, which he said he's owned for some time. Starbucks, a recent
Now he's a customer. I love it.
Listen,
I love Lulu as a customer, for sure.
Me too.
I don't own stocks because this is my job. But, I've got some Lulu pants and a Lulu shirt. I keep a Lulu shirt in my closet here in Alice's room in case I ever have to, get on a Zoom call that I feel like, I shouldn't just wear my
Isn't that funny, though?
t-shirt.
Like, that's workwear. It's not
100%.
just workout, clothes, if you think about how many years ago. But you're right, like the clothes that people are making, I think of some of the buddies that we've had on, whether it's Rhone, whether it's, some of the other brands, Mack Weldon. I mean, these are clothes that you go out in.
Oh, yeah, and go to
With
work
an
in, for
incredible
sure.
level,
No,
level of
absolutely.
comfort.
Especially in this world. Absolutely.
totally.
No question.
Yeah.
No question.
I got
All right.
shorts on right now.
Yeah. Got jeans in my t-shirt. Very comfortable.
All right, stick around, everyone. We've got the closing bell right here on Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it. Sound of the closing bell at the New York Stock Exchange. We wrap up trading for this Tuesday, September 15th. Dow Jones Industrial Average swinging between gains and losses right as the bell clangs. The Dow now looking like a 1-point close, pushing higher barely. S&P up 17, up 0.5%. NASDAQ up 133 points, decidedly higher, up there by just about 1.2%. This update brought to you by Withum, a forward-thinking advisory and accounting firm helping clients be in a position of strength in the new reality of business. Learn about their innovative solutions by visiting Withum.com. Equities paired gains as financial shares declined. The dollar fluctuated. Crude oil pushed higher. S&P 500 index traded near session lows after J.P. Morgan Chase slumped. A source told Bloomberg J.P. Morgan sent some of its Manhattan workers home this week after an employee in equities trading tested positive for COVID-19. Today, we saw the J.P. Morgan Chase shares did fall by 3.1%. Again, on the close, S&P up 17, up by about 0.5%. Well, as for the mood of the market, Jeff Krumpelman is Chief Investment Strategist at Mariner Wealth Advisors. Moments ago here on Bloomberg Business Week, he told us he's optimistic.
I think that there's enough in the psychological wall of worry camp to keep us cautious near term, but I've got to tell you that we remain positive on the next 12 months and do think that, we're up from here and we've got a target of 3,500 that we're biased to want to increase if we can push through some of these short-term issues.
Apple shares up by 0.2%, rolling out a number of new products today. Apple also ending its longtime card partnership with Barclays, a move designed to focus attention on its own Apple Card product financing plans. Recapping equities higher, S&P up 17, higher by 0.5%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Wild thing, think you move me. I got a few moves I know you'll like. Shake it, move thing, shake it, move thing, yeah, yeah.
What come on, shaking, not stirring.
Just move on up toward your destination. I can make things move without touching them. Shaking all over.
Bloomberg Business Week, Movers and Shakers, with Carol Masser and Jason Kelly on Bloomberg Radio.
All right, folks, it is time to take a look at some of the stocks on the move. We are awaiting earnings from FedEx, so as soon as they cross, we will bring them to you. In the meantime, big picture for the S&P 500, kind of an even split, 285 names in the index, higher in today's trading session, so a little bit more of a bullish tone, 217 lower, 3 unchanged. If I look at those 11 major industry groups in the S&P 500, top of the pack, communications services, that's up 1.6%, real estate up about 1.4%, consumer discretionary up 1%, so definitely more of a risk-on trade. Bottom of the pack, energy names and financials. Energy down about 0.8%, Jason. Financials, a decline of 1 1/3%.
Right, and we are awaiting some earnings. We talked a little bit with Jeff Krumpelman about FedEx. We're going to hear from them. I don't think those numbers are out yet. I'm just taking a quick look just to make
FedEx
sure they are out. Hey, there we go.
So, yeah, let's go. Let's go through it. See, we ask, they come. Okay, so let's take a look at FedEx numbers crossing, as we said. First quarter adjusted EPS 487. That is a massive mega beat. The estimate is $2.69 a share. So we're talking about $2.18 better than what was forecasted. FedEx is not providing an earnings forecast for fiscal 2021. First quarter adjusted operating margin 8.5%. Jason, the forecast was for 5.25%. So big beat there.
That's how you get an EPS beat like that. If your margin is better than 3% wider than people estimated, and your top line comes in first quarter revenue $19.3 billion. Another massive beat. The estimate was $17.55 billion. I guess all those T-shirts that I've been ordering, really good for business.
Exactly. Stock is up about 4% in the after hours. Listen, we all know it. We've been ordering, I think, safe to say, a lot more than we ever have before, and that is certainly impacting all of these names. FedEx now up about 5%. Stock's up 56% so far in 2020.
Yeah, and it's interesting that Jeff Crumpleman was saying, this is a name they've owned for a while, and they just sort of keep waiting for it to come back. So he's having a happy day today, sitting there in his Lululemon pants, thinking good thoughts about FedEx. Maybe ordering
FedEx
some more,
delivering some more.
Exactly. He's like, he's going to Lululemon.com, being like, you can FedEx me some new pants. I earned them. Adobe, they are just hitting the tape right now. Third quarter revenue coming in at $3.23 billion. That's a little beat. The estimate there had been for $3.16 billion. Also a beat on the bottom line. Third quarter adjusted EPS coming in at $2.57. The estimate there was for $2.41. Taking a look at the stock.
2.3% higher.
Yeah. So there you go. Well, some happy investors out there with some after the market earnings. Not a big earnings day, but those were the two big names that we were watching.
I wonder when it's going to be not okay to say we have no visibility about a year.
I thought it was going to be not okay by now, but it clearly is not. Although it does feel like, going back to Lululemon, sort of obsessed with that one today.
That's okay.
They did seem like they got punished a little bit for not providing some guidance.
Yeah.
Because it was a blowout quarter. They did really, really well in the current quarter, in the most recent quarter, but they did not provide any guidance. So let's take a quick look at the VIX before we get to some charts and stocks.
Yep.
Volatility down just a touch, less than 1%, closing at 25.61. It's Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for the price on Wilson.
Open up the door. It's Dave. Who? Dave.
Hey, Mr. Wilson!
Hey, Mr. Wilson. Dave Wilson is with us, a double dose of Dave. And first, we're going to start with your chart of the day.
Absolutely, Carol. I mean, if you figure that a company going into the S&P 500 index is a good thing in terms of their stock performance, well, there are some numbers out of Credit Suisse that, well, let's just say they'll change your impression. Jonathan Golub, who's the chief U.S. equity strategist, highlighted them in a report yesterday. If you look back over a month, a year, 3 years before a company goes into the S&P 500, yeah, they tend to beat the index. But if you look at those same time periods after the company's added, more than likely they're not keeping up. In fact, the gap that I highlighted in the text here, if you looked at the 1 year before stocks went into the S&P 500, going back to 2003, on average, they beat the index by 33 percentage points. If you look at 1 year after they go in, they were behind by 2 points. It just goes to show you, you can't count on a stock continuing to do well in relative terms once it gets into the S&P 500. That's the point. If you want to know more, folks, send me an email. I'll get you the chart, the explanation goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Well, maybe it's cost, buy on the rumor, sell on the news, Dave, a little bit.
It might very well be that. Absolutely.
Talk to us about your stock.
XL Service Holdings. It's EXL Service. They help businesses manage operations, especially in finance. We're talking claims processing, collections, customer service, finance, accounting, as well as business analytics. XL Service was founded in 1999, went public in 2006. The ticker is EXLS. Company shares rose in 10 of the past 11 years. 2018 was the exception. This year, they set a record in March and then plunged as much as 49% in less than 3 weeks. Now, XL has rallied since then and set a new recovery high after raising forecasts late yesterday. The company increased its annual earnings projection by more than 25% and also lifted its revenue forecast. XL Service said business rebounded more quickly than expected from a coronavirus-driven slump. The company also said it would spend $80 million this year on stock buybacks, and that's twice the amount the company had proposed. All this sent XL Services shares up as much as 12%, and they closed with a gain of 8.6%.
All right, Dave Wilson, a double shot. We'll always love it. We had beer earlier, and now we get 2 shots of Dave. So it's good. It all works out.
It does work out. Yep, get it out there.
All right, Dave Wilson, we will catch up with you tomorrow for your insights, your chart, and your stock. Coming up, speaking of stocks, Apple, some new products. We're going to go to our guru, Mark Gurman, or Guruman.
Guruman. Apple, by the way, was up just a hair in today's session by the close. So, all right, let's get back to world and national news headlines. Off we go to Ed Baxter in San Francisco. Hey, Ed.
That guy, you were really close. Well, here on the West Coast, we call him Guru Gurman. New hope for Middle East peace, question mark. Israel, United Arab Emirates, Bahrain, signing an agreement to normalize relations. Israeli Prime Minister Benjamin Netanyahu says it is definitely a positive future.
To all of Israel's friends in the Middle East, those who are with us today and those who will join us tomorrow, I say, Assalamu alaikum. Peace unto thee. Shalom.
Ceremony at the White House. The World Health Organization coming out today urging more pandemic prevention, especially until there's a vaccine. Dr. Margaret Harris on Bloomberg says there are a lot of candidates working.
The important thing to understand is we've got a very good chance of having at least one, if not more, excellent candidates, because we've got 9 vaccines going into what we call phase 3 trials, and we've got another more than 150 at various stages of development.
But she says when dealing with lots of trials, there's a 90% fail rate. Bill Gates, whose foundation has been working on funding a vaccine, today with Bloomberg's Eric Schatzker, says he thinks political pressure has cost the CDC and the FDA credibility.
Well, the CDC's largely been written out of the picture because you have people at the White House who aren't epidemiologists, you know, saying what a great job they've done. And so it's no longer a set of experts.
In San Francisco, I'm Ed Baxter. This is Bloomberg.
All right, Ed, thanks so much. You are listening to Bloomberg Business Week. Well, as we see all of this start to even out, where people are going to relocate to, what their lives are going to be like, what companies are going to do about it, how they're going to run operationally, compensation is increasingly coming into the picture. This, one of the most read stories, not surprisingly, on the Bloomberg Carol, it's all about Stripe.
Yeah, this is fascinating. So they're planning, Jason, to make a one-time payment of $20,000 to employees who opt to move out of San Francisco, New York, or Seattle, but also cut their base salary by as much as 10%. This is according to a person familiar with what's going on. The payments processor is going to make this offer available to workers who choose to relocate before the end of the year. And the person in the know said that, well, they couldn't discuss it, basically.
Yeah.
but
the person in there said, I can't tell you anymore. This is it.
But bottom line, if you're going to
it's a trend.
Right. If you're going to leave, you're going to have to probably give up some of your base pay.
Yeah, exactly. And listen, we saw VMware do something similar. Bloomberg News reported that on Friday, and VMware confirmed it. Facebook, Twitter, ServiceNow, they've all considered similar measures. No final decision made at those companies. Listen, it ain't show friends, show business.
No, and man, have they moved quickly. Like, I didn't know whether they were going to be like, you know, just give them a little time, figure out what they're doing.
Sort of wondered whether they might say, all right, well, at end of year, we'll sort of deal with it, or maybe give them a year to figure it out. But listen, I think there is some element of you don't want to give people a huge incentive to do it, and maybe you want to give people a little bit of a disincentive if you were in the Jamie Dimon camp of like, guys, let's come back to the office at some point.
Correct. Like, and I think at some point companies like make your decision because they have to know where you're living because of taxes.
Yeah.
And so they kind of, I guess, are just saying, let me figure out what I've got. And if you've got a big, you know, office, maybe you're thinking, okay, if most of my workers are going to leave, maybe I don't need it so much. So you've got to make some plans. Anyway, great read. Check it out at Bloomberg.com. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. FedEx delivers shares up 6%. FedEx reporting adjusted EPS for the first quarter that beat the highest analyst estimate. First quarter EPS $4.87, estimates $3.05. Shares again higher by just about 6%. Also after the bell, Adobe up now by 2.5%. Third quarter adjusted EPS $2.57, estimates there $2.41. Third quarter revenue on Adobe $3.23 billion, estimates $3.16. So a pair of beats after the hour, after the closing bell. Stocks did finish higher today with the Dow Jones Industrial Average eking out a gain right at the close, higher by 2 points, up less than 0.1%. S&P up 17, that was a gain of 0.5. NASDAQ up 133, up 1.2%. 10 years down 2/32 with a yield of 0.68%. Gold down 0.2%, 19.53 the ounce. And West Texas Intermediate crude up 2.8% today, 38.32 for a barrel of WTI. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, it was a big day. A lot of people were working hard. Few people were working harder, though, than Mark Gurman, tech reporter for Bloomberg, because it was an Apple Day, its first major product launch event of 2020. Of course, if you're Mark Gurman, you're listening and watching this and going, yep, reported that. Yep, reported that. Yep, knew that was coming. He joins us on the phone from Los Angeles. All right, so what were the surprises today, MG?
Jason, I'm going to have to hire you as my agent or something. That's too kind. No surprises today. The big announcements today, however, were the Apple Watch Series 6, the Apple Watch SE, the new iPad Air, and Apple One subscription bundles. Personally, I think that the iPad Air was the fanciest announcement today. I think it basically cannibalizes the entry-level iPad Pro, and I think they're going to sell a lot of them.
Yeah, tell us about that, because I was looking at some of your reporting and Ian King's post on the Top Live blog, which was taking us tick by tick. It's an interesting device. It, as you say, it sort of goes a little bit upmarket into where they had been with the Pro.
That's exactly right. So the iPad Pro adopted that sort of squared-off all-screen design without the home button 2 years ago. Now the iPad Air is getting that. And instead of a face recognition sensor, Face ID, it's actually getting Touch ID in the power button. And obviously with masks, Face ID is less useful. So putting Touch ID in the power button on the side of the device is actually really interesting and useful. And at $200 less than the iPad Pro, with not many of the features missing, I think it's a great product.
Yeah, this is interesting. And what about the watch? I've got the second generation. I'm getting a little old here. I mean, are the upgrades, are they substantial from watch to watch?
This year, no. Actually, I will tell you, this year's upgrade was very minor over last year's, and last year's upgrade was very minor over the year before. This year, they're basically adding two things: a 20% faster processor, which is not much of a speed increase. I believe a few years ago they claimed a 50% or 100% speed increase. Then the blood oxygen reader, right? That is another health sensor that helps give the Apple Watch a more comprehensive look at your overall health, how you're doing. But it's not some sort of mainstream sensor, right? The real, golden addition would be if they're able to eventually add blood sugar or glucose monitoring, because there obviously are millions of people across the world where that is very important. But we are ways away from there.
All right, so Mark, looking across your portfolio of interest, it was interesting to me to see when Apple rolls out their much more enhanced sort of fitness play, Peloton shares dropped. They still ended up on the day, but they went down noticeably when that announcement rolled out. Help us understand it in the context of what Peloton's doing now, but what Apple is going to be doing when it comes to the fitness world.
Yeah, so they're squaring off with Peloton in these online virtual fitness classes. This is exactly what Peloton offers for its devices, what Peloton offers on different set-top boxes like Amazon and the phone and such. The difference here is that Peloton's, it interacts with its own equipment and basically, in some cases, requires their own equipment, but it's platform agnostic in the sense that you can get it on any set-top box. You can get it on any type of smartphone, whereas Apple's system is very specific to Apple products at $10 a month. So I think there'll be some people who really are fitness fans and workout buffs and are going to want both. People are going to want both. They're going to want to use it with their Apple Watch. They're going to want to use it with their Peloton. And as you mentioned, Jason, the market is up after that announcement. I feel like some people might think, wow, Peloton should be down. But what Apple launching this service does, it sort of validates the space and the area that Peloton is in. And it's possible that the Apple service will have more people, more customers of technology learn that these types of products exist. They might see that. They might see Peloton devices. And so this Apple service could inspire more people to buy Peloton bikes and treadmills. And on top of that, the latest Peloton equipment works with the Apple Watch. So it's all connected.
Yeah. I got to say, coming off of the virus, Mark, I do think that fitness is one of those things that all of a sudden people are like, whoa, I can easily kind of almost have, my fitness classes, or I can, do it from home so easily. I feel like that's going to be a big change. And this is something that Apple can definitely kind of leverage here.
Totally agree with that. So I think it's good for both companies, to be honest.
Yeah.
Mark, did we learn anything about Apple TV and Apple TV Plus? Because I feel like that's been a laggard here. Only got about a minute left.
I thought you were going to ask him about a watch. That's what I'm waiting. Not a watch. I mean, about the next phone.
Okay, I'll hit both real quick. So Apple TV and Apple TV Plus, nothing new. I don't believe the new TV box will hit till next year. They did launch the Apple One bundles, which does sort of decrease the price of Apple TV Plus when you subscribe to multiple services. On the iPhone question, no iPhones today, obviously. Those will be announced toward the end of October. Start shipping at the end of next month, and through November will be a big upgrade with 5G.
That's the phone we want, right?
There you go. See, he brought it all together. He brought it all home, Carol. You don't need to worry about Mark Gurman. He's got it covered. Plus, if you want to know what's going on, you just need to read his stuff. You don't need to wait for announcements. All right, Mark Gurman, thank you so much. Tech reporter for Bloomberg, joining us on the phone from L.A. A comprehensive look of everything we heard from Apple with a little Peloton thrown in there as well. All right, for those of you listening in New York and San Francisco, watching on YouTube, Bloomberg Business Week continues here. If you're listening on Bloomberg 99.1 in D.C., Sound On with Kevin Surley, that's coming up next. We got some interesting stuff coming up here.
I'm still sitting on Apple and fitness. I think that's really interesting.
Yeah.
I think they're going to need lots of content, though, right, in order to make it work.
They are, and they haven't been so good on the content. That was one of the reasons that I was asking about the Apple TV Plus. I was interested in what Gurman was saying, though, about essentially elevating the whole notion of at-home fitness and on-demand, and the content may ultimately be good for Peloton.
Well, it gives it credibility, right, or legitimacy. All right. Stick around, everyone. This is Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So delivering my T-shirts, delivering Jeff Crumpleman's Lulu gear, very good business for FedEx. A heck of a quarter, and even though there's no outlook, people are loving it.
Stock's up 6.7% here in the after hours, so we're going to be watching this one well into the Wednesday trade. We're going to break down the quarter in just a moment, but first up, let's get back to your top business stories. All that news after the close. Here is Charlie Pellet.
All right, thank you very much. Got to begin with FedEx, and of course, what does FedEx say about the state of the U.S. economy? It is riding a wave of e-commerce demand that is boosting its pricing power to a degree not seen in the parcel industry in years, helping strengthen the courier's profit amid the coronavirus pandemic. Shares, as Carol mentioned, up now by roughly 6.5%. Also out after the bell, Adobe had reported revenue that topped analyst estimates, signaling robust demand for the software maker's cloud-based creative tools during the coronavirus pandemic. Its shares trading little change but lower. Kohl's slashing its corporate workforce by about 15% in a bid to rein in expenses as retail sales fail to recover to pre-pandemic levels. Kohl's shares down by about 0.7%. Federal Reserve policymakers have begun their two-day meeting. Sam Stovall is Chief Investment Officer at CFRA.
I think the Fed is going to remind us that they are still very concerned with what could occur in the next several months with the economy. They're going to re-emphasize the low for longer, also mentioning that it's going to be a matter of years, not a matter of quarters, in which they embrace an easier monetary policy.
Well, we find out for sure tomorrow, 2 o'clock Wall Street time. Yes, complete coverage as you've come to expect over the years right here on Bloomberg Radio. And, of course, we will have Fed Chair Jay Powell's press conference right after we get the Fed news. That, of course, 2:30 Wall Street time. Deutsche Lufthansa has told staff to prepare for more drastic cutbacks in its global workforce and the airline fleet it supports than previously planned after a hoped-for recovery of air traffic fizzled out. U.S. stocks today did trade higher, with the Dow Jones Industrial Average eking out a 2-point gain right at the close, up by less than 0.1%. S&P up for a third day, up 17, up 0.5, and Nasdaq up 133, up 1.2%. 10-year yield 0.67%. Gold down 0.1%, 19.54 the ounce. West Texas Intermediate crude up 3.2%, 38.46 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie Pellet, thank you so much. Charlie, of course, breaking down those FedEx headlines. We did 2 earnings after the close. Stock is rallying in the after hours. So what is it that you really need to know about this release? Lee Klaskow is Bloomberg Intelligence Senior Transportation, Logistics, and Shipping Analyst, joining us on the phone in New Jersey. So, Lee, it's out. Investors seem happy. Should they be?
Yeah, hi, Carol. It looks like FedEx finally over-delivered. I mean, after a lot of quarters of under-delivering, they have been making investments in their network, and those investments appear to be paying off. And for those investments to pay off, they needed volume. And the huge surge in volume driven by e-commerce really helped. They really blew away expectations as it relates on the volume side. The ground business, volumes were up by a third, and people were expecting just a mere 22% rise in volume. So obviously the demand for e-commerce with shelter-in-place orders has really helped. They've been able to offset the negative mix shift from increased business-to-consumer shipments, which tend to be more costly for them and have lower margins. And, they were able to expand their margin by about 160 basis points in their ground business. Which is really impressive to see.
And so we always want to ask, because this is one of these markets where you've got 2 major players that everybody knows, sort of setting the U.S. Postal Service aside for a second, because that's a whole other story, to say the least. FedEx, UPS, how do they match up at this point?
It's really 2 different stories. FedEx decided to decouple itself from Amazon, and UPS is heavily reliant on Amazon right now. So UPS, has somewhat of an Amazon risk. If let's say 5 years down the road, Amazon builds its own network and it doesn't need the parcel carriers anymore. I don't think that's that probability is extremely high, but it is a risk. But it looks like they're both on a positive trajectory and they're riding the growth in e-commerce. And what's going to happen, when economies recover is the business-to-business business, which it tends to be much more profitable. That's going to begin to recover, and you're going to see those volumes. So, there is a second and third chapter to this, this great quarter that FedEx had and a great 2Q that UPS had. It's just about how much of this surge in demand is going to stay longer term as people's buying habits have changed. Is this a cyclical thing happening, or are there really secular changes like, are older people now more comfortable buying online or on their phone? I consider myself one of those older people, so it wasn't a ticket, old people.
I'm right there with you, man. I'm right there with you.
So maybe because we are all in on the Bloomberg Green Festival that's going on this week and thinking so much about sustainability, and I had a great conversation with two investors earlier today about mobility and energy and EVs and all that good stuff. I do wonder, though, is there going to be increasingly more pressure on both FedEx and UPS, all the shipping guys, and I know they're moving towards it, but to really reduce their climate footprint? Because I do wonder what's the business case for all of them, in that increasingly it's going to be a higher cost, and that they've got to kind of get those programs in place.
Sure. Well, ESG is becoming more and more important to a wider swath of investors out there, and companies are reacting to that. That being said, the changes that transportation companies are going to make, if it's not driven by new regulations like we saw in the shipping industry earlier this year with IMO 2020, it's going to be a slow and gradual shift. But that shift has to make economic sense. People aren't going to change just for change's sake. One of the good things about a UPS or a FedEx, a lot of their vehicles, go out for delivery and then come back. That is a perfect application for EVs because when the vans aren't being used, they can be charged. That being said, FedEx, a lot of their ground delivery network are independent contractors, where UPS are employees and they're unionized Teamster employees at that.
All right, Lee, thank you so much, as always, for the instant context. We really appreciate it. Lee Klaskow is Senior Transport, Logistics, and Shipping Analyst for Bloomberg Intelligence, joining us on the phone. FedEx making their investors happy there, Kara.
Yeah, I mean, listen, the stock is taking off big time, so it's going to be one of those names that we watch into the Wednesday trade. And, we always like to watch these transportation companies as an indication of kind of what's going on in the company. I mean, in the company. Well, in the company.
In the country, the world, my doorstep, whatever. All right, let's get out to Ed Baxter. He's in San Francisco with some headlines. Hey, Ed.
All right. Hey, Jason, agreement signed today between Israel, United Arab Emirates, and Bahrain. Israeli Prime Minister Benjamin Netanyahu at the White House says a new day for the Middle East.
This day is a pivot of history. It heralds a new dawn of peace.
A U.S. brokered deal. Joe Biden in Florida courting Latino and Latina votes. He has talked Puerto Rican aid. The WHO says there are 9 vaccines going into phase 3 trials and hundreds of other phases of development. But the organization spokeswoman, Dr. Margaret Harris, says there is a caveat.
But normally, when you've got lots of things, products in development, you'll see a 90% fail rate. So we still don't know which ones are going to come out.
And speaking of vaccines, Bill Gates is out today on Bloomberg saying that both the CDC and the FDA have been tarnished by political involvement.
Historically, just like the CDC was viewed as the best in the world, the FDA had that same reputation as a top-notch regulator. But there's been some cracks with some of the things they've said at the commissioner level. Hopefully the staff isn't pulled in that direction.
The Gates Foundation donates to global vaccine development. A bipartisan House caucus, 50 members, half GOP, Democrats laying out a relief bill roadmap today. And meteorologists are noting the smoke in New York skies today. Well, here in California, we just thought we'd share it with you, a little bit of love through the jet stream. Skies getting more blue here bit by bit. In San Francisco, I'm Ed Baxter. This is Bloomberg.
So glad to hear that.
That they're sharing some of their smoke with us?
No, that the skies are starting to get a little bit bluer.
They are. Yeah, it is getting a little bit better, although the air quality is still really crummy.
Terrible. It's terrible.
In any case, they are still doing some good work. Our colleagues out there on the West Coast, Nico Grant, Dina Bass, love them both. Writing a great story about Snowflake, and they say, riding a wave of enthusiasm leading to its public offering tomorrow, Optimism, cloud computing company, can more than hold its own against yet some pretty stiff competition, talking about, I don't know, Amazon?
Talking about Amazon? Yeah, come on. It's totally dominated by Amazon. It's the top provider of public cloud storage and services. So it'll be interesting. Snowflake already bumping up its IPO price range to 100 to 110 a share. That was from 75 to 85. It's trying to raise, so let's see, add it all up, 3.08 billion. See how I did that just quickly in my head, Jason Kelly?
Wow, yeah, such a whiz.
No, I read Nico and Dina's story. But we're talking about a potential $30 billion market value for this company.
Well, it's interesting, too. I mean, names make news, and you look at who's behind this and who's backing it of late. No less that talk about big names, Berkshire Hathaway and Salesforce.com. They both snapped up stakes in the company in private placements that are concurrent with the public offering. So they're obviously buyers there. We know that Warren Buffett and Berkshire aren't really traders, to say the least, so they obviously believe in the long-term value here.
But it's so cool. I'm doing more work into Berkshire. I mean, there's so many moving pieces to it and parts to it, but it is fascinating to see how never really a big high-tech company, and that has changed dramatically, whether it's Apple or, like I said, like you just said, Snowflake. So it's really interesting to see the evolution of this company as well. And we'll see.
Snowflake also, I'm just going to say it because we're talking about it. It's kind of a funny name. It's like, who does your cloud? Snowflake?
Yeah.
Isn't
Who does yours?
Sort of an
Who does
insult
yours?
out there?
Amazon, AWS.
Yeah, exactly.
Do you want AWS?
Amazon.com.
Snowflake.
No, Snowflake.
Amazon.
Cute little public cloud. Anyway, they're going public tomorrow. This is Bloomberg.
Okay, ladies and gentlemen, I am placing it in order to sell at 118.47. If it will reach this price, it will be stop on profit for Euro USD, United States dollar, at my short position that I opened a couple of hours ago at 118.49. The stop on profit goes to 118.47. Okay, let's hope we will sell it. I don't really want to keep it overnight, but we will see how it's going to be.
E-commerce demand that's boosting its pricing power to a degree not seen in the parcel industry in years. Adobe is reporting revenue that topped analyst estimates, shares up now by about 1.7%. Sources say a national security panel reviewing Oracle's bid for TikTok is meeting this afternoon to decide whether to recommend the president approve or reject that deal. Equities moved higher, little changed in the Dow, pushing higher right at the close there, up by 2 points. Little changed again, the S&P up 17, up 0.5%, 3 in a row there for the S&P. Nasdaq up 133, up 1.2%. 10-year down 2/32 with a yield of 0.68%. Gold down 0.1%, 19.54 the ounce. And West Texas Intermediate crude up 3.1%, 38.42 a barrel. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Well, let's catch up with an old pal of ours, Vinny Catalano, Chief Market Strategist for Stuyvesant Capital Management, also Global Investment Strategist at Defoe Red Mount, joining us on the phone from New Jersey. Vinny, missed you at the U.S. Open. I feel like, the world is just not the same. We're not seeing you and all of that. And these markets are just so kooky right now, and as usual, you've got a take, so share it with us.
Okay. Well, the feeling is mutual in terms of not seeing you guys as well. And, yeah, it's not the same, but we'll get there eventually. During the pandemic, one of the benefits, if there is one, is the ability to spend more time contemplating some of the other issues that are in this complex system called the stock market. And one of them deals with something that has to do with the nature of investors moving money at different points in time from one asset manager to another and what the implications of that are. This is not core to the investment decision-making process. It is not essential like the discounted cash flow model inputs and stuff like that, or monetary policy and or globalization or innovation. But this is one of the elements that is worth looking at, and I wish that there was some statistical analysis of this. So what I'm about to say is really anecdotal from my experience working with individual investors. Investors tend to move money when markets go up. They go from asset manager to asset manager more frequently than they will in down markets. Now, that's an interesting little factoid, but what does it mean? What it means, from what I can tell, is that the bias tends to be for financial advisors to be bullish, permanently bullish. Because if I know that I'm going to lose assets to someone else in an up market, then I want to be more bullish more often than I do ordinarily, let's say. So it's a dynamic that is just kind of an interesting thing, and I sent a message to my good friend Bud Hazlitt over at the CFA Research Foundation, and I said, hey, Bud, could you look at this? And it would be good to kind of see if this is so.
And anything back from him yet?
No, Bud didn't respond yet. I sent it to him this morning. Once I know definitely this is what we're going to cover. But I'll make sure that I pester him enough on this.
Well, why is this important that you point this out? Just talk to us. I'm thinking about our listeners who are hearing what you're saying right now, Vinny, and kind of trying to understand this market environment, which is an interesting one, that despite some of the stresses that were out there, once we got beyond the initial sell-off because of the virus, it does feel like there's nowhere but up, certainly when it comes to equity classes. But tell us why you think this is important for investors to be aware of.
Well, they should be aware of it, I believe, because it's an influencing factor upon the advice that they receive, or at least the advice that I would have given when I worked at Merrill Lynch for 25 years, which is that, you know, the leaning, the tendency is more toward being long-term bullish, mainly because equities do tend to rise longer term. If you adopt the Warren Buffett approach to investing and you just don't get caught up in market cycles, then buy and hold becomes something that is fundamentally a good thing to do. But this is another dynamic, and the dynamic here is the personal interest of the financial advisor, and whether or not that becomes an influencing factor for them to be more bullish than they not just because of the fundamentals, but also because of the fact that I know that I could lose my clients to someone else, and the tendency is for it to be in up markets. Now, again, anecdotal, my experience is nothing unethical or illegal or anything like that is going on. It's just a dynamic that's I think is worth someone exploring and looking into, because it could be an influencing factor.
And so, Vinny, in the age of Robinhood, in the age of all this technology that we've dealt with, I feel in the age of zero commissions and low fees and all of that, are we on the verge of a reckoning in the money management business, do you think? Or is this going to sort of ramble on indefinitely?
Okay, what I'm describing is not what you just asked, but yes, I think it'll ramble on. I think that it'll just continue to go on. You know, people... Part of the dynamic here, Jason, is that unfortunately there's just too high of a level of financial illiteracy in which individual investors just really don't feel comfortable enough to ask the right kind of questions. The focus on gains versus percentage returns and relative performance. You know, this is a market that's dominated by institutional investors. And it behooves the average investor to understand the nature of the beast. How does the institutional investor make his or her decisions? And they make them based upon relative performance and other factors. And so, therefore, I'm hopeful that someday there will be a higher level of financial literacy. And that's kind of the other element and dynamic that's here, you know, in trying to understand the decision-making process that an individual investor has to go through. It's almost like being afraid of math or something like that.
Well, this has been, I feel like, you know, Vinny, financial literacy has certainly been a conversation throughout my career doing business news, which has been a long time. It's kind of not a new thing, but as the markets get more complicated and you want to make sure that when you're investing, you kind of understand what's going on and kind of where your advisor is coming from. All right, Vinny, thank you so much. Vinny Catalano, he's Chief Market Strategist at Stuyvesant Capital Management and Global Investment Strategist at Defoe Redmat, joining us on the phone from New Jersey.
Coming up, I guess we can't call it whole paycheck to him, but we are going to talk to the CEO of Whole Foods, right?
Listen, Whole Foods, John Mackey, man, he really changed the way we look at supermarkets and our expectations. And yeah, sometimes it's more expensive. Yes, it's more expensive, but I have to say, I'm kind of a disciple. I really respect what he's done.
Yeah, no, I'm in.
And the whole idea of just kind of better food choices and options for people, and you know, thinking about where the food is produced as well. So
where it comes from, I think, is a really, really big deal. That it's one of these things that once you really start to learn about it, you can't unlearn it. No. You know, it's like anyone who's read Omnivore's Dilemma or any of those sorts of books in that oeuvre is, you know.
I've got his other book. It's signed by him on my. I'm showing it to you right now.
Yeah,
I know. I went to the 92nd
No one else can see that.
I know. Conscious Capitalism, 92nd Street Y, a few years ago. Actually, I think our Norm Pearlstein.
Wow, throwback.
I know.
There you go.
It was a few years ago. So anyway, John's got a new book out, so we're going to get into that. This one's called Conscious Leadership. So we'll see what he has to say about the world at large, about Whole Foods. So much to come. John Mackey joining us right here on Bloomberg Business Week on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Let's begin with FedEx, riding a wave of e-commerce demand that is boosting its pricing power to a degree not seen in the parcel industry in years. After the bell, FedEx had an earnings beat, shares up by roughly 8%. Also reporting after the bell, we heard from Adobe. It's out with revenue that topped analyst estimates, signaling robust demand for the software maker's cloud-based creative tools during the coronavirus pandemic. Shares up by just about 1%. Turned out to be an up day for the U.S. stock market. Stocks advanced as gains in tech shares helped offset a late slide in financials. Crude oil pushed higher while the dollar was little changed. S&P 500 rose for a third.
Okay, sorry, ladies and gentlemen, I have to leave probably this order until tomorrow because it just, as you can see, it moves rapidly up and down, and I removed order. So I'll wait until tomorrow and I will see at what price I'm going to sell it. Okay, have a great evening. Stay safe, and I'll speak to you all tomorrow. Bye for now.
To see new people become unemployed if Citibank and some of these other firms start going through with these layoffs.